Okay, hi everybody. How you doing? We're here. We're alive. We're here for another week of fun, 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 fun. It is Monday, February the 7th. Welcome to the channel Stock Markets with Bruce. I'm Bruce. I'm the guy they call Uncle Bruce. Love eating a bagel on the air just to tease you. Nice to have you here. Trying to explain the stock markets in plain English. That's all I do. I just I just sit here and I watch the stuff coming in, all the news coming in, everything breaking everywhere. Try to interpret it all, put it into plain English, and tell you what's going on. It's relatively simple, but it's not that simple. And there's a lot going on, and there's always a lot going on, and it's constantly changing. What we thought was happening a week ago, or a month ago, or a year ago, it's different now, and it'll be different tomorrow and next week. And so, folks come around here to hang out with good old Uncle Bruce to have him give them the morning rant, which is kind of what I like to do in the morning, and then figure out with them what's going on as we start trading. I'll be on here for about 3 hours. The first hour right now is pre-market, and then I'll be on for the first 2 hours of trading. And then this afternoon, you can catch me at 3 o'clock Eastern for my second show. 1 hour before the closing until half an hour to 15 minutes after closing. It all depends on just how goofy things are. That depends how long I stay on the air. Today being Monday, I happen to have two channels, by the way. I have this channel, Stock Markets with Bruce, and I have my other channel, Traveling with Bruce. I'll be on tonight at 7 o'clock for members only on that channel, and then at 8 o'clock Eastern Time. Anybody can join me at 8 o'clock Eastern Time on Traveling with Bruce. We will talk about the latest travel news. I'd like to concentrate more on cruise ship developments, but we'll cover it all. So you're welcome to join me 4 times today live, as if I have nothing better to do. Or you have nothing better to do. Yes, thank you all for your continued support of both of my channels. The Dow future right now up 60 points. The S&P futures are up 12.75, and the Nasdaq futures are showing showing 66 points. So 66 for the Nasdaq, now 13 for S&P, 64 for the Dow. All three were negative about an hour and a half ago when I first got up. Heck, I've been up 2.5 hours. Oh my God, I can't believe it. Yeah, we're up 0.19% on the Dow, fifth of a point. We're up 0.31% on S&P, and we're up a half a percentage point on the Nasdaq. And all three are strengthening right now. They're all getting better and better and better and better as we're coming into the market. Now, we had a phenomenal week last week. When you look at the weekly numbers, you're going, oh, not much happened, Bruce. What are you all excited about? There were hardly any changes last week. Well, yeah, on the overall indexes, you kind of look at the numbers, and it didn't sound like much happened. Didn't look like a lot happened. The Dow was up 1.1%. S&P was up 1.5%. Nasdaq was up 2.4%. But we had phenomenal news last week that really shook the market to its core. We had the surprise of surprises from Facebook, Meta, whatever they want to call themselves, Meta crap. They shouldn't have changed their name. Facebook disappointed the markets big time. They shocked the markets big time, and I'm kind of surprised at how quiet Wall Street is about it. Facebook knew a month ago that their numbers are going to be crap. They had to know. They had to know a month into their quarter that their numbers would be garbage. They had to know. And they said nothing. They gave no one a hint. There was no preview of earnings, no heads up. This is what drives me crazy as a very old guy that was brought up to believe in rules, regulations, and that regulators were on you if you were trying to pull a fast one. I grew up as a broker and as an investment advisor in my early 20s, surrounded by thieves and crooks and shysters, because I was in Calgary, Alberta, Canada, which is the oil and gas capital of the country. And we had the Alberta Stock Exchange over there, that little tiny stock exchange just for those Western Canadian kind of businesses, mainly oil and gas companies, mining companies. Vancouver was a cesspool of trouble over there. Vancouver Stock Exchange was the gambler's den of gambler's dens. I mean, every scheme imaginable was pulled off over there. The regulators were constantly complaining about Vancouver Stock Exchange shenanigans and the Alberta Stock Exchange quasi shenanigans. And then there was the Toronto market, the Montreal market. Occasionally, Montreal would have a blow up, but Toronto would be like the Wall Street of Canada. At least that's what they tried to, they gave us the image that they were, the high-end good guys. There were still shenanigans going on over there. It didn't matter. In any event, back in the day, if you tried to pull off, deceptive practices where you weren't, upfront with your investors, you would get slammed. I mean, you could have your stock suspended from trading. You could have insiders suspended from trading. You could have employees of the company banned from whatever. It was serious stuff, and you had to do disclosures. Now, here we are in the last 3 weeks, 4 weeks, definitely in the last 2-3 weeks. I have been telling you guys who are following me about the 8 different former SPACs that I have been following, that with you, that I've been recommending you take a look at, pick them up if you can. And I've been telling you about what these companies have been doing ever since last year at this time when I first revealed my kind of list of my SPACs. As each week went by, I'd add a couple more, and I topped out at 8 different SPACs. A bunch of these guys, I'm not sure if it's 2, 3, or 4 of them already. They've already done what we call pre-earnings report releases, kind of like warnings. These are like warnings. But instead of coming up with warnings and saying, oh, hey, listen, everybody, our numbers are going to be way off. We're way out of projection. Our numbers are not working out. Our sales aren't as good, or our losses are going to be more, or whatever the problem is. Basically, these guys have been coming out going, our sales are higher than we projected. We thought we were going to do 100 million in sales. We're actually going to do like 105, maybe 110. We just want to let you know that things are a little different than we had projected 3-4 months ago. Here's an update. We'll report to you in a month from now when our earnings are supposed to come out. We'll let you know when we get our numbers finalized from our auditor. But we already know now that our numbers for the latest quarter that we're about to reveal to you in the next few weeks are different than what we thought they'd be. Not like double or triple different, but just 3%, 5%, 10%. We're talking in some cases here 5% differential of what they projected and what they're actually doing. That little, okay? Apple, scratch that. Go back for Facebook just came out with 25% lower earnings. A disaster for $1 trillion company. This is $1 trillion company. This isn't a SPAC worth $5 billion book value, $2 billion, $6 billion, $12 billion. This is a $1 trillion S&P 500, very sophisticated corporation that pays income tax, by the way. They pay income tax, which means that they are watched by the IRS very, very closely on all earnings that they make. There's likely, similar to Apple, there is likely an office for the IRS inside Apple's headquarters that IRS officials sit in and have a very close symbiotic relationship with the bookkeeping department at Apple, so that Apple constantly pays their taxes on time on an installment basis, and there's nothing missing. Well, I mean, come on. These guys can't not have known, with all this all the surveillance, all this oversight. How could they not have known that the numbers were going to be off for this latest quarter? And we're not talking about the numbers being off 3 or 4%, where it's kind of it's a decimal point. No big deal. No. We're talking 20, 25% miss. This is huge. This is catastrophically bad. Okay. This is a major, major miss of financials. And they didn't give a pre-warning, not a hint to anyone about anything. And then if you read the text of their so-called release when they did announce their numbers, oh, everything's fine. Oh, we set new numbers, new records for this and that. We're proud of this division. We love how this division is going. We're just happy as clams over here. Yet the stock plummets and loses $190 billion of book value. The company loses like $200 billion in value, like that. Every shareholder got taken to the cleaners. Anybody who was long call options on the stock at the 300s, the 200s, they all got wiped out. And we were talking about untold billions more that were lost over and above the market cap that was lost. It's one thing that the stock dropped like it did. It's all the trading on the stock with the option players. Those went down dramatically on call side. The puts, of course, went up, but the calls went down. Most people play calls. Anyone who wrote call options on Facebook were smiling because those calls they wrote, an hour ago before the market ended, or that during the day of the earnings, or that week, or the last month, or the 6 months ago, who still had options outstanding, they were all worthless. I mean, virtually worthless. So these writers were just buying back at a penny, buying back contracts. Wonderful. Everybody who was long wiped out completely. And yet, do you hear any kind of an investigation by the SEC into the reporting practices of Facebook? I hear nothing. I don't even hear, not a single member of Congress is calling for an investigation into how can it be that a $1 trillion corporation, one of the largest FANG stocks, is not being investigated for not updating investors on a pending disastrous earnings report. How can Wall Street keep getting away with this crap? I don't understand it. I mean, I do understand it. Who's kidding who? I totally understand how they're getting away with it, but from my days as a brand new investment advisor from the 70s and 80s and the 90s, way back when I was, a broker, then I was a desk trader, a stockbroker, desk trader at the same time. Eventually, a branch manager, a vice president of a brokerage firm. I was a partner in a brokerage firm. What did I have to go through all the time? What did I have to learn to get my securities license? What did I have to understand to become licensed as a partner and as a vice president of a brokerage firm? What I had to write courses upon courses upon courses that regular salespeople don't have to do. The salespeople just had to pass the securities course. That's all they had to do to get their license. I had to get the partners and directors examinations. I had to get all this other stuff done. It was all about due diligence, all about reporting to authorities anomalies in the market, all about recognizing shenanigans when they were occurring, reporting shenanigans if you came across any. It was constantly market surveillance to protect investors against shysters. That was what it was all about. This is the 70s and the 80s. Every single branch manager, partner, assistant branch manager even, owner, shareholder of a brokerage firm, if you owned so many shares or more, percentage of the company or more, you had to have all the insider licensing. You had to be approved by the regulators to even be a director of a brokerage firm. You couldn't just buy your way in as a crook to come into the inside and become a broker, partner in a brokerage firm. No, you had to be completely licensed and approved. You had to have all the documentations, all the exams, and you had to be able to prove to them that you knew what the hell you were doing. And if your firm was involved in illegal trading practices and it was your branch that was involved, you as the branch manager, your days were numbered. I mean, you were down to hours. and you were out of the business. Out of the business. You weren't, you got to take a 2-week suspension. It's not like Whoopi Goldberg getting a 2-week suspension for saying something about, the Holocaust. No, 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 no. You were out. You were unemployed without severance with your firm. Your firm kicked you the hell out of there because they were told by the regulators, get rid of this guy. Facebook is coming to the market, surprise, surprise, last Tuesday night with a 25% miss on profits. This didn't happen the last week of the quarter, okay? They didn't everything was going great until 2 weeks to go, and then everything fell apart, and we didn't even realize it until the money, we counted all the revenues and took all our expense, and then when we figured out a month later, the accountants came to us and said, oh my God, we reveal our finances tomorrow. We just figured out we didn't make 25% as much money as we were supposed to. No, it doesn't work like that. It was 90 days as a quarter, 91 days as a quarter. They knew all along. All along they had to know. They had to know. Otherwise, they don't know what they're doing. But they do know what they're doing, okay? They're quite good at what they're doing. But there's no call for an investigation, no call for, let's look into this, no call for shareholder disclosure rules may have been breached. What did insiders know and when did they know it? How can a public company be allowed of this size? I'm not talking about a little shyster over-the-counter little stock. I'm talking about a company. I can't tell you enough how big a problem this is. This is a huge, huge breach of trust between a public company and its shareholders, and for all investors. And I'm not trying to protect just retail investors. You think there's 422 of you here, and you're going, oh, he's talking about us and how we should be protected. No, not just you guys. I'm talking about every single investor, whether you are directly involved with the stock or whether you're not involved with the stock. You don't own any Facebook. You never will own any. You don't give a crap about the company. You still have to give a crap about what happened. If you're a retiree soon to be, you're going to retire in 3, 4, 5 years, 3, 4, 5 months, and you've been squirreling money away inside your employee savings plan, and your employer has, moved your money into 5 different hedge funds or ETF funds, or 5 different mutual funds, diversified investment portfolio type investing, really conservative stuff. You were affected last week. The market took a dump on Wednesday. It was ugly. It was scary on Wednesday. Thursday we had a great recovery, and Friday it was so-so. We had some recovery. Thursday was a bad day. Friday was this is not right. We were affected to the tune of hundreds of billions of dollars of perceived value of the markets, and trillions of dollars of trust evaporated into the market instantaneously once Facebook came out with this ridiculous report. Absolutely outrageous, without a single hint, weeks leading up to it, that something was up. Something was up. They could have announced a month into the quarter, they could have announced that they're not going to reach their numbers. They could have gone 2 months into the quarter with a revised guess. They could have come 2 weeks before. They could have come out saying, our numbers for the next quarter already are behind. We already know. Nothing. Complete crickets. Just the sound of crickets by the campfire, with no one there to tell you what the hell's going on. And it was the big surprise of the markets that night, the Tuesday night. And what happened with Amazon stock? Look at what happened to Amazon. It was down $200 a share the same night, the same time when Facebook took its dump. Look at Google. Google dropped $100 a share in the aftermarket. There was just carnage everywhere. Complete worry about, oh my God, what's happening with the internet? What's happening with the cloud? What's happening with social media stocks? What's going on? And nowhere, zero, do you hear any talk whatsoever of an investigation from Congress or any agency about any of it. It is complete crickets. And the folks in Wall Street are saying everything's fine. Everything's fine. Everything works just the way it's supposed to work right here. We're all fine here. There's nothing to see here. There's nothing to worry about. The fact that there were probably maybe tens of thousands of investors in other stocks other than Facebook. It could be hundreds of thousands of investors. I'm talking globally, not just Americans. Globally, tens of thousands, maybe hundreds of thousands of investors who were really adversely affected with what happened with their stocks. Many of them sold out at the lows, or they were blown out by their brokers because of margin calls that suddenly appeared on stocks that no one thought would have margin calls. There could be theoretically hundreds of billions of dollars of money lost by innocent investors who were never, ever given a chance to even react to this news, because there was no pre-market warning issued by anyone about anything. There was no trading halts. There were no explanations. It was like business as normal. Business as usual was being conducted. And if you get sucked in with the proverbial, oh, I'm going to go with the crowd, I'm going to get out because the crowd is getting out, you got hosed, you got taken for I don't know how many dollars in your own personal account, multiplied by how many others out there, and we're talking tens of billions, if not hundreds of billions of dollars. And at the end of the week, I'm on Saturday here on this channel giving you the recap for the week. And I mentioned to you about who did what happened. We had the jobs report on Friday, and Google had huge profits, and Amazon had a big earnings surprise. Yeah, well, that was after losing $200 a share. Then they went up $500 a share to be up $300 a share. How many people got post losing $200 a share? Snap shares went up 58% after collapsing the day or two before. Facebook had this god-awful number. No investigation, let's look into this. How do we protect investors from complete annihilation by these incredibly huge corporations that are larger than countries in a GDP sense? Can't control these guys. And who's going to bring Facebook to the carpet for this lack of transparency? Because that's what it is. Those of you who have invested in ATP, physical therapy, the SPAC that we talked about. I talked about it back in February last year. I think it's a great concept. I think the company's going to do very well, corporately very well. They had a misstatement in a quarterly financial. They came out with a quarterly financial, their first ever as a public company, and they missed the mark. They missed the number they were supposed to hit. They got lambasted by every brokerage firm in the street. They got sued with class action lawsuits, or at least threatened to be sued. So-called lawyer investigations were going on by law firms trying to put together class action people to go after these guys. Dozens of law firms immediately banded together to go after ATP, to claim that management should have known the effect on their stock had they paid any attention whatsoever to the fact that they were going to miss their quarterly projections. And when they released their numbers, they were lower than the thought, and the stock took a real dump from, I can't remember the numbers anymore. We were at 12, 11, down to 5 or something like that. They're still in the $3 range, still trying to recover. This was a SPAC. This was a former SPAC that was now no longer a SPAC. The merger had been done. ATIP took over the SPAC. It was now a publicly traded company. And the stock took the dive when they misstated their financials. And then the next quarter, what did they do? They came out with a pre-quarter update to let you know that we're going to release our numbers in a couple of weeks. And here they are. They're looking great. We're fine. We're doing what we thought. And then they pretty well done it again. Facebook said nothing. Facebook has an army of auditors inside their company. They have hundreds of people, along with I don't know how many gigawatts of computer power, giga whatever of computer. They have the IRS literally on site to stay on top of these guys. There is no way that a bunch of people didn't know, that had to know, that report to who, how they're doing. And they knew for weeks, they knew for months, and no one said a word. And it was a complete deception. I charge them with the deceptive practices, I say, because they dropped the nuclear bomb on the market Tuesday. I guess it was Tuesday night when they revealed their numbers after the close. I think it was Tuesday night. And it created a tsunami wave of destruction on a whole bunch of other stocks unrelated to Facebook directly. Twitter stock took a dump. Amazon took a dump. Google took a dump. Apple backed off. Microsoft backed off. All kinds of guys backed off. I mean, Pinterest and you know them. You know who I'm talking about. Kathy Woods' ETF took a dump on this news because of all the stocks inside her portfolio were directly affected by the Facebook tsunami that came through. And we're talking about, I know we're talking about maybe $1 trillion of losses, of paper losses. Had to have been. Collectively, add it all up, how many billions of dollars of value disappeared, evaporated into the sky instantaneously? It was just eviscerated instantaneously. Not a single member of the Securities Commission, the banking committees, the Senate, the Congress, absolute crickets. Nothing to see here, nothing to look at, nothing to investigate. It's all good. It's all good. That's how quiet it is. That's how quiet it is. And what are we complaining about? Hey, Bruce, the market, the Dow was up 1.1% last week. S&P was up 1.5%. And that NASDAQ you keep talking about, Bruce, what are you worried about? It was up 2.4% last week. What are you yapping about? I mean, God, shut up. Just take it. Bend over and take it. It's okay. There's nothing to see here. The companies are all still in business. Everything's fine. There's nothing to worry about. Don't worry about, you don't have to worry about having confidence in these companies' abilities to tell us how they're doing. They know exactly how they're doing. We're on a need to know basis. And you know what? Every 3 months, what we should do is go to the bathroom and puke and worry about what's going to happen to my money. That's what we're supposed to do every 3 months. Because every 3 months we wait for the FANG stocks to release their financials at the end of the day, at the end of the market, and pray to the almighty that the stock won't drop 15, 20% this evening in the next 15 minutes in the aftermarket. In the market where the aftermarket is the Wild West of trading. If those of you who have noticed what happens in the aftermarket, shares can go up or down dramatically because there is nothing there. It's not even 1/10 of a regular market liquidity, whether it's buy orders or sell orders. It is a wide open 6-lane highway with no speed limits, and you can go either direction. There isn't even a divider between this way or this way. It's 6 lanes, and we have no idea who's coming at us and which are going with us and what lanes we're supposed to be in. That's what the aftermarket is. It's complete mayhem. You can come on the highway anytime you want, get off the highway anytime you want, because there are no on-ramps or off-ramps. It is complete mayhem. And when we meet another expressway with 6 lanes going this way, we're going that way, there are no bridges, there's no shoulders, there's no ramps. It's just free for all. That's what the aftermarket is. The regulators don't regulate the aftermarket. They don't seem to. There's no investigation as to practices that should be followed on the aftermarket. There's no circuit breakers on the aftermarket. The Dow Jones Industrial Average, let me repeat that. Refresh that. The New York Stock Exchange in 1987, when I was a broker and I was a VP of a brokerage firm, dropped on a Monday in October. We dropped 22% in one day. The worst single calamitous day in the history of the stock exchange was October 1987 on a Monday. It was the worst day in the history of the stock market of all time. Worse than 29, worse than 9/11, worse than when Kennedy was shot, worse than when Reagan was the attempted assassination of Reagan, worse than when the shuttle blew up, worse, the worst, 22% in one day. We couldn't get quotes. We could not give a customer a quote on General Motors, on AT&T. We couldn't tell them what the Dow was doing. We couldn't tell them the level of the Dow Jones Industrial Index because New York didn't know. New York didn't know what the quotes were because the systems crashed out. We were down to the dark ages of yelling, floor traders yelling at each other to do trades. And only they knew the markets because they didn't have time to go to the telephone booth to tell the phone traders what was going on. So they could tell the desk traders in Peoria, Pittsburgh, St. Louis, Chicago, Seattle, Calgary, Toronto, Berlin, Hong Kong, Taipei. Nobody knew anything. That was the worst day of all time. All right. After that day, the New York Stock Exchange and the NASDAQ, they got together with the American Stock Exchange. They got together and said, we've got to fix this. It wasn't like the next morning they fixed it. They fixed it over the next couple of months. They figured it out. They put in circuit breakers. And so this morning, if the Dow Jones Industrial Average starts taking a dump with the S&P and everything else, after I think the first 7% or whatever the percentage point drop in so much period of time, everything's halted. Trading is halted. This has happened now a few times since '87. If you ever watch Bob Pisani and you see CNBC, or you ever go to YouTube and enter Dow Jones circuit breakers, you'll see videos of times where there were circuit breakers enacted. It stops the market cold, dead, and there's no trading for 10, 15 minutes. And it gives traders, buyers and sellers, 15 minutes to get their orders together and figure out what they want to do, along with quotes. Here's the quote. Here's the quote. At least you know what the market is. So you can decide you want in on this market. Here's the pricing. That's what happens during trading hours. After markets, pre-markets, after, there are no circuit breakers. It's the wild freaking West. So if Facebook closes at 325 at the bell, and starts trading at $250 a share in the aftermarket 2 minutes later, because the earnings came out that were a shock to everybody, that just blew the world away. That's a $75 drop on the stock. That's 25%. You can't do that during the market hours. You cannot trade down 25% in one trade. Not allowed. That's beyond the circuit breaker. It would have been halted to give the market a chance to understand what the hell is going on. And don't you think that every single shareholder of at least Facebook, the company, the actual shareholders of this actual company, don't you think they deserve better than to find out from a friend, calls them up, say, hey, have you seen your Facebook in the after hours? The guy goes, what are you buying? I'm at the grocery store picking something up for dinner. What are you talking about? Well, take a look at your phone. Look at your Facebook. And you open it up and go, I'm down 25%. It just closed at 323 on the night. We just closed at 323. The earnings are coming out. Yeah, the earnings came out. Yeah, they're way off. Like this company has just blown. It just lost $190 billion of book value. Welcome to 2022. There's no protection. Absolutely no protection for investors whatsoever. It's an absolute Wild West. This is ridiculous. And this is a gap that will not be repaired. Is there a congressional hearing going on about this? A potential hearing? An investigation by the SEC? Nope. No, crickets. Because Wall Street says, well, this is just the way we've got it set up, and that's just the way it is right now. And that's that. And it allows people to get annihilated, economically annihilated, and there is no recourse. Welcome to the markets today. We think we've come a long way. We really do. We really think we've come a long way with these markets, and we've really figured out a way to protect investors, and it's all going to be fine, and da 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 da. But there are gaps. There are wide openings here that just allow howitzers to come through and annihilate and eviscerate investors left, right, and center. And I don't know what the recourse is. I really don't. I don't see. If I'm missing this, you tell me, because you do tell me if I miss stuff. But I haven't noticed 25 law firms announce legal investigations into the reporting techniques of Facebook and its financials. I haven't seen a zillion class action lawsuits being proposed against Facebook and its complete lack of transparency with regards to its latest quarter that just annihilated their financials to every degree imaginable. I don't understand. There's nothing. I've seen nothing. I got nothing. I see dozens of lawsuits that were proposed against ATIP. Yeah, I saw dozens of those. We talked about that all the time. You're always asking me, Bruce, what's with this ATIP? Are they being investigated by the SEC? What's going on here? All these law firms are attacking the company. What's going on? What's going on? Yeah, this little tiny SPAC is being investigated because their earnings numbers were lower than projected. Were they going out of business? No. Did they completely deceive every single shareholder by pulling fast ones? Did the staff of the company steal money? No, none at all. They missed their earnings projections. That's all. Well, Facebook just missed their earnings projections, and it only cost the market $190 billion of value lost on Facebook stock. There was $800 billion more lost by everybody else who got sucked into that vortex. Nobody is suing anybody. There's nothing wrong here. Everything is fine. We're all good. And if you want to buy into an IPO through the boys at Wall Street, it's all good. We're going to underwrite a company at $70 a share, and it'll start trading at $150 a share. And you're allowed in as a retail investor to buy all you want, and it'll run to $225 in the first few hours. And all the sellers are the insiders, and all the buyers are the retail saps. And 3 months later, the stock is trading at $70 a share. And there's nothing wrong here whatsoever, because those people who sold the stock were allowed to sell their stock. And those people who bought the stock decided to buy the stock thinking they could make money on the market. And it's just the way the market is. You sometimes you just buy at the wrong time, That's how Wall Street is kind of run. And it's run by the big boys who owns most of the market. The big boys, the large investment bankers are calling the shots. And who funds the super PACs that fund the politicians that sit on the banking committee of Congress and the Senate, who are the overseers of the system? Who funds these guys? Who funds the super PACs that fund these campaigns to keep reelecting these very agreeable elected officials who sit on these boards? The same big boys in Wall Street. Why would you not do that? Why would you not fund the banking committee chairman to get reelected? I mean, if they've been passing committee bills and proposing bills to the Senate and to the House that are favorable to Wall Street, why would you not fund these guys? You want to keep this going. This has been going on since the 70s and the 80s and the 90s and the 2000s. Don't think this is we just started this. This has been going on for decades. When I started as a broker in 1978-79 in Canada, there were hundreds of different firms that you could use to buy and sell stock through. All kinds of regional and local brokerage companies and mom and dad firms in all provinces. They were all regulated by each provincial securities exchange, which was part of the national thing. You had Merrill Lynch Canada, and you had Nesbitt, Thompson, Burns. You had Burns Securities, Nesbitt, and Thompson, which eventually became one. You had Richardson's, then Richardson Green Shields, because you had Green Shields. You had Richardson's. You had Wood Gundy, you had Dominion Securities, you had all these brokerage firms. Some were national, some were regional, all over the place. So when I tried to become a stockbroker and be hired by a firm, I had dozens of firms to go and try and get a job at. And eventually I found one to take me on. Well, within 10 years of that day, 1979 to 1989, by 1989, in all of Canada, there might have been 40 left. And by 1999, there might have been 20 left. Out of hundreds in the United States, there were once thousands of stock brokerage firms. Thousands. They were regional specialists in Chicago, St. Louis, New York, Philadelphia, Frisco, Los Angeles, Dallas, Houston, Denver. There were stock markets everywhere as well. There was the Philadelphia Exchange. There was the Chicago had the various exchanges, the futures and everything else. New York had Amex and Nasdaq and the New York Stock Exchange. That's all consolidated now. And none of the stock exchanges, they were all owned at the time. The stock exchanges were owned by the brokerage firms that were the members of the stock exchanges. Today, the stock exchanges have consolidated into a few large machines, and they're all publicly traded companies. They're no longer owned by the firms that do the trading anymore. They're now businesses unto themselves, and they are contributing money to the politicians to keep the game going, as well as the brokerage firms and the investment bankers and the banks and everybody else. Anybody on the inside of this business is keeping this shop closed, and we don't want any more regulation. We don't want any more oversight, and we certainly don't want any due diligence done on our affairs, because we take care of business. Leave business alone. Keep government out of business. Freedom. After all, this is America. We have to be free. Allow us to be free to do what we do best. That's great if you're on the inside of this great, big, fat business. Yeah, it's fantastic. But if you're on the outside getting hosed, not so good. And if you have nowhere to go to complain or to seek retribution or get justice, your voice isn't heard. And so you have to deal with what you have to deal with. Welcome to the world in 2022. I'm not trying to give you a downer day here. I'm really not. I wanted to just bring you up to speed as to the real world and what's really going on. And what's really going on is a company can lose money, not project their financials, not give you a heads up that it's going to be bad, knowing they knew it. They knew all along. Facebook knew all along their numbers were going to come in. They are allowed to just spring it on you in an aftermarket setting where the stock will go down 25% in one instant and stay there. And you have no chance to get out. You had no chance to make up your mind as to what you think is going on, because weeks ago they knew how bad it was going to be. And Wall Street says, this is okay. That's normal. We're okay with this. It's all right. This is business as usual, because they'll say, we had people lose money too, you know. I mean, we had all kinds of investors into Facebook. We're all down 25%. So what's the difference? The retailer investors down, we're down. Hey, that's just the way it is. The fact that 400 other listings all around this company also dropped 5, 10, 15, 20, 30, 40, 50% in price. And a number of them haven't recovered. They haven't recovered since. That's nothing to see here. That's just the price you pay for being in business. So what do I tell you to do? What does Uncle Bruce say that you guys should do? I started off by telling you all about Facebook and AMC and all the meme stocks back in January last year, a year ago. Went live January the 25th last year. I've been live since. And I've been trying to tell you how this game works. I've been trying to tell you how these stocks trade and how they settle. And I desperately try to explain to you from time to time, as best as I can understand it, how synthetic trading happens and how all the derivative stuff happens and everything else. And then starting around February, March, I started talking to you about options. And shortly after that, I started talking to you about how you could write options. And as it's gone forward and forward, you've figured out that if you want the equalizer, you want the great equalizer, you are a writer of options. That's the equalizer. Because there's one thing about being an option writer that no hedge fund can beat you up over. No pension fund can get you. No hedge fund, no ETF, no regulator, no public company with shenanigans. There's one thing about being a writer that you have in your back pocket that protects you. And I keep telling you guys, you can quit your day jobs if you play this right. You can retire early, or you can, let's put it this way. You're not retiring. You're just replacing your grunt job, the career you hate that's let you down or just hasn't satisfied you or given you what you wanted or has taken from you what is most important to you, which is your life, your time, your relationship with your spouse, your children, your family. It's taken away your stress. It's taken away your stability. It screwed up your brains. Whatever it's not given you or given you that you didn't want, you can get away from all that. And you can be the master of your own domain, like we say on Seinfeld. You can be the king of the castle. You can write options. And what's the one thing that you have is your secret weapon, the ultimate weapon. And it's not even a secret. It's an open, known fact. You are writing call options that have a week to 2 weeks to 3 weeks left to live, 4 weeks left to live, that are out of the money. And the entire proceeds you receive by selling a call option or 2 or 10 or 50 or 100, whatever the number is, that money is all premium money based on how long the option has left to live. Time value, the secret weapon. It's the nuclear bomb that you have that can't be taken away from you. And it works each and every time. You write a contract with 2 weeks, 3 weeks left to go, 5 days left to go, 3 days left to go. Write a contract this Friday on GameStop, this Friday, out of the money. That contract will be worth nothing Friday afternoon if it stays out of the money. Those shares don't go up to where you wrote that call at. That money is all yours because the clock is your secret weapon. And no shenanigans on Wall Street or anywhere else can take it away from you. Yeah, you can say to me, well, Bruce, they can manipulate the stock and make it go up $5 anytime they want. Yeah, they could. They don't have enough money to make every single stock in the world go up $5 a share. And if you're writing contracts that are $10 out of the money, what do you care? They move it up $5. You're still $5 out of the money. The contract still dies worthless. Your premiums are locked in. Now, some of you say to me, yeah, but Bruce, I'm only going to write a contract if I can get maximum return. I want to write a contract, with the stock is at 105, I'm going to write a 105 contract against it, and I want all of it. Well, now you're the sap, because if you're going to play that game, you are the gambler. You're not the casino now. Now you're the guy on the floor because you're gambling with everything. Why would you want to do that? Pointless. Why don't you write a 107.50 contract against a 105 stock? Write a contract out of the money. The stock's down here, you're up here, and the days go by and the shrinkage occurs. Let shrinkage work for you rather than against you. Like George Costanza, it worked against George, but it can work for you. Enjoy the shrinkage that is being handed to you on a silver platter by the big boys in Wall Street and by all the gamblers who are playing the options market. There are 578 people watching me this second right now. This changes all the time. 578, that's all that are watching me right now. This is the smallest YouTube channel probably out there live right now. Why? Because I'm talking to you guys about writing option contracts. Do you know how few people do this? This is how few people do this. 578 of you is how many there are. Even a percentage of you guys don't do it. Most of the 578 don't even do this. I am telling folks out there, you can do option writing and become one of the 0.1 percenters and let the 99.9% of the rest of the market go nuts and go long and get their brains handed to them. Just like with Facebook, just like with Amazon on Tuesday night. Sure, on Wednesday night, Amazon went up. Oh yeah, it did. After people got wiped out first. Don't forget that. Snap went up after it went down. Other stocks came back after they went down. Some stocks came back, didn't come back enough. Anyone who was writing options, just as a matter of course, just writing options because Apple is now 173 or whatever the heck it's trading at. I'm going to write 175. So if bad news comes out this afternoon that Russia is moving troops into the Ukraine, Apple stock will drop $5 a share like that. If you're short contracts, call contracts, you're going to go, oh, that's too bad. It's really sad, that the Russian troops are moving. But wait a minute. I sold my Apple calls this morning at $475 a piece. I wrote 10 contracts. That's $475 a contract times 10 contracts. I wrote $4,750 of the contracts. What are they trading at right now? Oh, they're trading at $500. I think I'll buy them back. Thank you, Russia. Not nice, but, will there be a congressional investigation about that? No, that's your $4,250. Thank you very much. If you're writing options as a matter of course, out of the money, with a short period of time left to go, you're going to be a winner more often than a loser. And when you're a loser, there's a way to avoid being a loser, because shares that go up in price, yes, shares can go up because they do go down. You just buy back your call that you wrote and write another one further out in time at a higher strike price. And you tell the stock, keep coming to me. I'm up here now. I've written this contract. I had a contract that was going to expire this Friday. Now I have a contract that's going to expire 3 Fridays from now at $10 a share higher. And I just sold that contract for more than what I bought the loser back for. Okay, I originally sold one for $5. I bought it back for $10. I've just written a $15 contract. I now have $10 a contract in my account, and I'm up here. Come and get me. You keep coming up. Your stock filters out and levels off and begins to back off. That contract you wrote up there starts to shrink. You've got $10 a contract waiting to buy it back. You're a very patient person. Don't forget, of course, if the shares did go up, you're likely a shareholder. So you were happy they went up anyway. Or you were a poor man covered call writer. You bought deep in the money contracts on that stock. They went up, and those contracts have gone up with you. You're richer on those. You're actually more richer on these than poorer on the ones you've written, which is, again, another advantage of being an option writer. The clock can work for you, and it is unshakable. There's nothing the shysters can do to take it away from you. Write options and quit your day job. That's the theory of today's show. And with the shenanigans going on from time to time, and I'm not accusing Facebook of being a shenanigan thing. I'm just saying Facebook should have come clean a month ago, at least a month ago, with a guidance update, a guidance alert, something, a hint, just a corporate update. Just, folks, the quarter isn't going to be what we thought it was. And let the market deal with it. But do this during market hours. Don't do this on the after hours. As a matter of fact, I prefer you do this pre-market so that we have a shot when the market does open as to what the hell's going on. This nonsense of releasing financials after the close, I think is ridiculous. I think public companies should be forced to release financials during the market. I think the market should, the exchanges and the regulators should say to public companies, you have to halt your market, your stock, 2 hours into trading. You have to halt it 2 hours in and then release your financials. And that gives everybody the rest of the day on the actual market itself, the fully liquid stock market, to make their choices as to what they want to do. You release the financials, you wait a half an hour, call the stock for trading, you get the pre-market bid and asks all figuring itself out, and then open the book for trading. That's what they should be doing. And that's what the New York Stock Exchange should be insisting on all their listed stocks. It's what NASDAQ should be insisting. Have the market specialists who are there to regulate and maintain orderly markets do. Because right now you're leaving it open to the speculators on the aftermarket to regulate the markets. These guys are cowboys with 6 guns. They don't give a crap about the company. They give a crap about the shareholders. They don't give a crap about regular trading. They have no circuit breakers to worry about. They have a wide open field to do whatever the hell they want. And if they want to open a stock down 30% from last trade, they can do it without any repercussions or penalties. You can't do that on the New York Stock Exchange. A stock has circuit breakers. So in reality, if Facebook would have released their earnings on the Tuesday during the day, with hours to go in the session, the stock would have been shown with a pre-market bid and ask, but it wouldn't have been allowed to open in 30 minutes. They would have delayed it another 15 minutes. And then it still wouldn't have been allowed to open. They would have delayed it again, only because it's so out of whack between buys and sells. You have to let the market find its equilibrium. You got to give buyers and sellers a chance to get in. That's what the markets are supposed to be there for, liquidity. But that you're not giving the investors any hope whatsoever by doing it in the aftermarket. It is an absolute annihilation, complete evisceration of $200 billion in value. Gone. No need to investigate this. 200 billion, it comes and goes. But that little ATIP, that little physiotherapy thing, yeah, that stock opened down $5 a share. That cost investors $1 billion in book value. We better investigate this. Let's sue these guys. That's what the lawyers are saying. The difference is absolutely stunning. It is absolutely ridiculous. In any event, the rant is over. Did you have fun with that? That's just one day. Welcome to the markets, kids. There's nothing going on here. There's nothing to see here. That blood on the floor, that's just chump change. Don't worry about that. We're fine. You'll be fine. You have nothing to worry about. Right options, kids. If you watched my gold member show this morning, if you're a gold bagel member, you got your trades. I told you what to do today. You pay extra to be a member of my channel. I've already told you what to do. You know what to do. Get to work. We have money to make in this market. Let's make it. See how it goes. Every day is a new beginning. Quit your day job, write options for a living, and take control of your life. That's what I say. Go to my website, stockmarkerswithbruce.ca. Check out my classes on how to write options, like class number 11, quitting your day job by writing poor men covered calls. Go to class number 8, go to class number 2, 3, 4, 5, watch them all. Become educated on how this works and how this evolves and how this happens, so that you have a better handle on what's going on. You can't learn this in one day. No. If you think this is a get-rich-quick scheme that others out there are offering you, you can forget about it. This requires a bit of dedication on your part. That's why there's only 591 people here. If I was promoting and I was bragging about get-rich-quick schemes where you take 1,000 and turn into 100,000 in 2 months, I'd have 5,900 people here. I'd have 59,000 of them here, because they'd all be dreaming about, oh, the lottery win. Bruce is going to tell me about the lottery win. Now, forget about that. There is no lottery win. You got to grind it out, but you can grind it out. Since you're grinding life out anyway, why don't you grind it out for yourself rather than for somebody else? That's what I'm thinking. You're going to be going to work 40 hours a week. If you're lucky, your boss will let you come home after 7 or 8 hours of work every day. How many of you out there were hired on a 37 and a half hour work week, and you've never seen anything less than a 60-hour work week? Are you paid for 60 hours? I don't think so. I think you're paid 37 and a half hours, and they tell you to keep coming back for more. Maybe it's time to take control of your life and go the other direction. Just a thought. It's just me. Anyway, there you go. Welcome one and all to the day. Larry is about to hit the bells to get us started for the day. Hope you don't mind on my little rant today. I don't want to depress you, but I don't want to mislead you. I want to tell you the truth about what's going on out there. You have to know it. You have to understand it. You've got to figure out what's going on out there. Who are you in competition with? You're not in competition with a machine. You're in competition with other human beings. All right. Some of which don't like you very much. They're going to try to get your money. So you have got to figure out how to get their money. And the best way to get the money from the market is to make the market pay you. And one way to get paid by the market each and every time is right out of the money call options that expire this Friday or next Friday or the Friday after that. They're all trading at nothing but potential time value. They have no value whatsoever other than time. And you're getting paid to just sit there and do this. It's going to expire in 4 days. It's going to be worthless. I sold them for 6. I'm buying them back at 2. I don't have to buy them back at 2, but I'm going to buy them at 2. Why? Because I'm going to write another one at 6 that has 3 weeks to go. I wrote it with 3 weeks to go. I'm buying it back with a week and a half to go. And now I'm writing another one that has 3 weeks to go. And I'm taking those $4 shrinkages each and every time on as many contracts as I can write. Quit your day job and start writing options is the theme of today's show. Thank you for being here. Love having you guys from around the world. Hope you don't mind the old man ranting. We are open, I think. Larry, did you do it? Yes, Larry did it. Thank you, Larry, my man. If Larry rings the bells, we're open. It's just as simple as that. There's nothing magical to it. Larry just rings the opening bell. We're up 64 points on the Dow from what I can gather at the moment. We're just seconds into this thing, so we'll see how it works out. I think we're up 6 on the S&P and 18 on the NASDAQ, but this will clarify itself in the next 5 minutes as we kind of settle into trades. It looks like we've got a green opening, except for oil, which is off 82 cents a barrel. Good to see that. I'd like to see that back to $50 a barrel. Cheers to all of you from around the world. This is my caffeine-free Diet Coke. I need a little drink here. Oh, yes. Thank you, one and all, for being here. Your kind words. I hope you guys are doing okay. Hope you're making some money. You're going to make money today. Plot out your strategy. As Gold Bagel members, I want you to get rich. If you're not a Gold Bagel member, please become one. And join me every morning on this channel before I do the 8:30 rant, so I can give you your trades of the day that you should be looking at. And we'll try to stay on top of what's going on. Things change minute to minute, second to second. Things change. So hang around and let's see how this market treats us all and how we can work it. I've got GameStop at 103, 104.10 actually, up 176. I'm thinking that if the shares want to climb like this, you may want to look into selling contracts into the strength of this move. I don't know what kind of power move we're going to get on GameStop, if any. I'd like to see it closer to 110.15, but at the moment, 104.36, up $2, 61,000 volume in 2 minutes. So it's a nothing burger. So writing 105s for this Friday is a safe bet. Looking to write maybe one between 105 and 110s for next Friday. Looks like I think it's a safe bet. Keep in mind, though, if the shares do want to go to 120 tomorrow afternoon for whatever reason, and you wrote 105s that expire this Friday, not to worry. You have until Friday to do a rollover. You can always do a rollover tomorrow if you wanted to, and just buy back these 105s and now write 120 to 125s for Friday, or 2 weeks Friday, or 3 weeks Friday. There's all kinds of rollover possibilities that we can look into, and we'll just deal with it. But at the moment, we're up $2.50 a share at 104.86. Okay, thank you. Now 105. Great. It's not up $12. It's up $2.66. So it's calm. It's better. The Dow's up 8 points. So, it's doing great. But writing a 105 for this Friday might be the one. Maybe you can write a 106 or 108 or a 110. I don't know the splits. I haven't looked at the chain. You're looking at the option chains. I'm just giving it to you in plain English. The Dow, I show up 10 points now at the moment. Now I shout down 11. So there are obviously stocks opening up for trading on the exchange. I'm going to try to see how this works out. The Dow 30 does open up. Sometimes all 30 stocks start trading immediately. Other times it takes a few minutes for all 30 Dows to get going because of order imbalances, and then we get started. So right now I'm showing down about 8.6, now 3 points on the Dow. I've got S&P down a point. I've got NASDAQ up 15. I've got Russell up 11 points. I got the VIX up 0.65 to 23.87. This is the early first thing in the morning numbers. I've noticed this morning, as you probably all have, that Frontier and Spirit are going to merge, creating the 5th largest airline in the USA. That means 2 budget airlines are becoming 1 budget airline. You know what that means? Higher prices for Americans. That's what that means. The airlines are talking about, this is going to guarantee lower prices for Americans. Think again. When you go from 6 carriers to 5, or you go from 2 discount carriers into a large discount carrier, that means there are fewer discount carriers. And Frontier and Spirit Guess what they won't do anymore? They won't be competing against each other anymore. They will not have flights into the same airports anymore. Only one of them will have flights. The new airport, the new airline will have flights into these various airports. That means the prices will go up because there's less competition for the consumer to choose from. It's as simple as that. So there used to be 4 flights a day into your airport with those 2 airlines. I bet you there'll be 2 flights into those airports for those airlines when they merge together, and that means half the seats are available for the route that you want. Welcome to America. That's how it works. It works that way in the pharmaceutical business. It works that way in the banking business. It works that way. It worked that way in the automotive business when there used to be 10 car companies back in the 30s and the 40s. By the time the 60s rolled around, there were the big 3 plus American Motors, and even they got crushed out of business. So welcome to lack of competition where the big, the strong crush the weak and you pay more. Well, that's the American way. That's okay. It's all fair in love and war. It's just business. It's nothing personal, to quote some character from a Godfather movie. It's nothing personal. It's just business. Rocket Lab is up 22 cents to $9.71. We got SoFi up 36 cents to $12.25. GameStop at 103.56, up 122. Matterport is 8.56, up 18 cents. ME up 8 cents to 4.83. Spire down 1 penny to 2.88. ATIP is up 2 pennies to 3.03. Smart Rent down 11 cents to 7.83. Cyxtera down 6 cents to 11.38. AMC Movies 15.66, up 31 cents. Robinhood down 20 cents to 14.98. Vanik Vectors up $1.67, 274.20. Robinhood, Home Depot HD. I keep thinking Robinhood. Home Depot is up 157 to 361.24. IBM is off 62 cents to 136.53. Microsoft up 88 cents, 306.82. Apple is up 63 cents to 173.02. Goldman down 228 to 365. Cisco down 33 cents, 54.84. Facebook, Meta Platforms down 36 cents to 236.73. Amazon up $37, $3,190. Tesla is up 556 to 928.88. Google is up 6.99, now up 8.09 to 28.68. Bed Bath Beyond up 23 cents to 16.42. BlackBerry up 4 cents to 7.41. Royal Caribbean up 3.15 this morning to 78.73. They released their financials last week, bleeding money everywhere, delayed profitability by quarter after quarter after quarter. Stock is up $3.03. Complete break with reality when it comes to the investors of the shares of Royal Caribbean. And the same at Norwegian. They're up 93 cents. Carnival, they're up 72 cents. The investors have no idea what they're doing. They are completely out of their minds. But hey, it's America, baby. You can buy whatever you want, whatever price you want to pay, and you can dream about better days ahead. It's okay. It's called freedom. Target up 75 cents. JP Morgan down 48. Costco down 306. Walmart down 29 cents. Nvidia up 224. Disney up $1.89. eBay down 23 cents. Twitter up 26 cents. American Airlines up 52 cents. Of course, airlines are going to be higher today. Fewer competitor routes for all airlines. As soon as the merger between Spirit and Frontier is done, United, American, Delta, Southwest, they all make more money. Fewer flights, higher prices, baby. You're going to get screwed. It's going to be great. Netflix up $1.35. Snowflake up $20. DraftKings down up 70 cents. Moderna down 238, 160.62. Anyway, there you have it. Welcome to another day in America and Canada and around the world. The markets are open. The Dow's up 2.59 points to nothing burger. S&P is up 8 points. NASDAQ is up 88. And that's where we're at right here, right now. There's talk about Peloton being a takeover target. Some of you might want to ask me about this. If you've asked me and I've ignored you, it's not. I'm not doing this on purpose. I'm just ranting right now. Haven't had a chance to read a single comment. There's a chance that Peloton could be a takeover target and could be taken over by the likes of an Amazon or an Apple or what was the other one? Nike. Nike was rumored to be might take them over. The thinking is that an outfit that takes over Peloton and absorbs it as a wholly owned subsidiary entity would then acquire all of the millions of email addresses and information on the followers of Peloton, the fans of Peloton, all the existing clients that have already purchased the product and are now subscribed to Peloton services. And then they would be buying into an industry, an entity, I should really say, a company that has already gone through all of its hardest days of a brand new brand to put itself on the map and all of that. There's brand recognition, Peloton. If Peloton is owned by Apple or owned by Nike, then Nike can add Peloton to its marketing campaign. Apple can add Peloton as another division of Apple's whatever. Amazon can add Peloton obviously to another product line that they're covering. If Costco bought them, I'm just spitballing here. I'm not saying they will, but even if a Costco bought these guys, Costco would get their hands on the names of millions of Peloton fans, of which many could become Costco members because they have that kind of demographic, they have that kind of money. We're talking about people in their 20s and 30s that want to stay in shape, that are working out from home, that have disposable income to be able to afford a Peloton machine and its subscription rates. This fits the wheelhouse demographically of the companies I have just mentioned. Apple, Nike, Amazon, Costco. Yeah. There could be a bunch more. There may be a bidding war for Peloton. If Peloton is truly available, and I think it is, there could be a bidding war for Peloton. Now, what could be the bidding war be about? It could be about all cash, or it could be a stock deal. It could well be that Amazon just comes out and says, we'll give you $40 a share cash. It could be Apple saying, we'll give you $50 a share cash. It could be Nike coming in with a stock deal or a combination cash stock deal, giving Peloton shareholders stock in the company that's taking it over. We don't know. In my past life as a stockbroker over all the decades, there were bidding wars for companies. I remember there were bidding wars for oil and gas companies. There'd be 2 or 3 companies trying to buy one gas company, oil and gas company, and the first company would offer a stock worth $20 a share. The second company would offer cash at $15 a share plus stock at $10 a share. It's a $25 offer. Third company would come in and offer preferred shares that paid a guaranteed dividend plus a cash advance, blah, blah, blah. That would give maybe a $28 value. And then there would be the fourth company coming and said, we'll just give you $30 cash. And they'd blow everybody out of the water because nobody had more than $30 cash to offer these guys, and the deal would go at 30. They would always vary, and these would be protracted bidding wars that would last weeks in the old days. Nowadays, it takes days. It can be done in days, and it's possible that Peloton could be scooped up this afternoon or tomorrow or next week, where the board of directors approves an offer from company whatever, or perhaps as we speak right now, Peloton is sitting on 3 offers that they are confidentially, quietly looking over to, as a board of director, decide which one is best for the shareholders of the company. Now, they may come back and say, we received 3 offers and none of them were acceptable, and we rejected them all. We don't know. They may come out and say, we're not interested in being sold. The rumors are that we are, but we're not. We don't want to be bought out. Then they might adopt a poison pill, which would be something like, if you buy us out, you have to pay a penalty of blah, blah, blah additional monies, or you have to pay consulting fees to this and that. It might be such an onerous deal that nobody wants to buy them. That would be the debt to the detriment of the shareholders of Peloton, though. That would not save them. At the moment, Peloton would be best to welcome offers and to entertain them and say to the market, we're prepared to take offers for the next 2 weeks. Anybody that's interested in taking us over, come to us. Our advisors is Morgan Stanley or Goldman Sachs. Those are our consultants. They will help us determine which bid is the best for the company and our shareholders. And the bidding is open for a 2-week window or a 3-week window or 1 month. Then you may have rumors flying around for weeks that there's 4 or 5 companies that are interested in putting in a deal. And at the end of the time frame, the stock gets halted, and the company announces their decision as to, we got bids from 10 companies. We contacted all of them, told them thank you. We talked to 3, the top 3. We discussed the top 3 scenarios. A couple of adjustments have been made. We're down to 3 now, and they come out with saying we've decided the one that is the best offer, and our board of directors have unanimously voted to accept this, and we encourage our shareholders to accept this offer when we have a shareholder vote. That might be the way it goes, and that could be $35, $38, $40, $43, $48, $50, $52, $60, $70. I don't know. Deal. So if you want to gamble on Peloton right now, knock yourself out. You can try and gamble on Peloton. The trick of it, of course, is how high will this go and how expensive is it to play into Peloton, to try to play it on an option basis. It could be extremely expensive because of the premiums on top of the shares. That could well be an issue. So you may be better off just trying to buy the stock on a flyer. Right now it's $31.08 a share, and you have to decide whether or not you want to play this potential game or not. What can the company go for? They do have cash in the bank. They have more assets than liabilities, but they are at the moment not delivering the numbers that was hoped because of the future of the so-called the variants and the virus and unlikelihood of another shutdown. And so Peloton is being perceived as a company that may slow down its business because people are going to go out. They're going to get out of the house and they're going to go travel, and they're going to, they don't need to be, they're not going to be necessarily stuck in their downtown Manhattan apartment riding an exercise bike. They're going to get out and ride a real bike in Central Park, or they're going to take a holiday for 2 weeks this year to Connecticut or to Maryland or wherever, and they're going to get, I don't know. There's always that, but it's for a long-term acquisition. If you're a Nike or you're an Amazon, you're thinking, well, you know what we might do is we might buy different companies in different segments. So we might buy the Peloton company. If you're Amazon, we'll buy Peloton, and then we're going to buy Cobra Golf, and then we're going to buy Pro Staff, and then we're going to buy Raleigh Bikes, and then we're going to buy this company, all these companies in the different sports area, workout area, to control them all. They'll all be subsidiaries of Amazon, and then we will sell their product on Amazon. That might be their game plan. Again, corner the market, dominate the market, raise prices, and make money. There's that game. We'll see. Nike might do the same thing. We got our shoes, now we've got our Peloton division over here, and then we're going to buy sports company, blah, 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 and we're going to buy this company. They might do that. I don't know. We'll see. Welcome to the fun world. If the deal gets done at 35 or 40 bucks a share and you buy at 30, 31, you might make some money. Buying options, I'd be careful with that because the premiums are ridiculous. I don't know what I would make of it. Peloton earnings tomorrow, this could affect it too. Here you go. Peloton is way off in the last year. Absolutely right. It's unbelievable. So I don't know. We'll see what's going on. If they can make a deal, they can make a deal. And if it works out that it's a $50 a share cash offer, there will be winners and losers. Anyone who paid 50 or more doesn't make money. Anyone who bought the stock at 50 or less is even or makes money. Simple as that. I don't know what the price will be for the company. I have no idea. Credits average. All right. I sold 20 SoFi. $15 covered calls for March 18th for 75 cents. Yay, there's 50,000 contracts out there. Let's see if I'm right. Daring them to come and get me at 15, use that money to buy more SoFi and average down. Yes, there you go. So SoFi is 12.22 right now. Credit Savage is writing $15 covered calls. So he's saying, you can have my stock at $15 plus give me 75 cents premium, which is what they're doing. He's selling out for $15.75 in theory. In reality, we know that's not what he's doing, because what he's really doing is he's bringing in this premium right now. He's using the money to buy more stock at $12.20. Great move. But he's also probably in a position where he's sitting there going, if by March the 15th, 3 days before these options expire, if the shares are trading at $15.50, I could be exercised because they're 50 cents in the money. But you know what? They're only going to be trading at 50 to 60 cents a piece. I can buy them back for less than what I sold them for. The worst case scenario is I can get it back for 75 cents. And guess what I'll do now? I'll write new options for a month from now, April's or May's $15 exercise price, or $16 or $17.50s, and I'll take in 75 cents again. Come and get me $17.50. I'll buy these back, break even, and write new ones for 75 cents at $17.50. Here we go. Come and get me now. I got 75 more cents in my pocket for I replaced it, and I'm happy to take the $2.50 gain on the deal. Shares want to go up to $17.50. I'll buy those calls back, and I'll write 20s, and that's what Credit Savage is doing. Anyone else can do it if you want. I'm not generally don't recommend writing options under $20 a share, but here's something. Here's something to consider if this is what you want to do. You want to spend the 75 cents on something else? Great. But you could also just keep that money in your account as dry powder to buy back these contracts if necessary, to write additional contracts, to buy them back and write additional contracts going forward if necessary. Right now, the stock is at $12.28. We're up 39 cents on SoFi. Go, SoFi, go. The higher, the better. Okay, let's see. What's going on? What's going on? Welcome one, welcome all to the show here. It's nice to have you here. Nice to have you come by and see me. Hope you're doing okay today. Hope I didn't grind you down too much with my rant. Nice to see you all. Let's go. Never a dull moment. All right, let me take a look at the markets again. All kinds of stuff going on. We're down 4 points on the Dow. Now we're even. 0.001 rise on the Dow. We're flat. S&P is up 11. NASDAQ is up 122. There's the winner, NASDAQ. We've got Rocket Lab up 27 cents to 9.76. SoFi 12.25 up 36. GameStop 103.60 up 126 a share. Matterport 8.54 up 15. ME 4.92 up 17 cents. We are trying to get back to $5 a share on ME. Good to see that. Spire down 1 penny. ATIP up 4. SmartRent up 26 cents to 8.20. Nice to see $8 again. Sextera 11.50 up 6 cents. AMC 15.50 just up 15 cents. Robinhood down 18 pennies at $15 on the nose. Vanik up 3.92. Home Depot up 15 cents. IBM down only 19 cents to 136.96. Microsoft up 49 cents. It's at 306.43. Apple's up $1.29 to 173.70. Goldman up 4. Cisco down 8 cents. Facebook is down 3.38. Amazon up $68. Tesla up $19. Google up $13 at the moment. Those are the majors we're following with most of what's going on here. Welcome one, welcome all to the show. It's nice to have you here. And well, let's just see what happens. Oh my gosh. We've got things to watch. Earlier today when I went live for my Gold Bagel members right here, I mentioned some trades that they could consider. Now that it's half an hour into the opening approximately, I'll let you in on that for all of you. What I talked about this morning for my Gold Bagel members was on GameStop, for example, sell into strength. If the shares want to run up a little bit, you want to sell calls into the strength of GameStop. I was hoping that they would run to 110.15 first thing this morning. It's not happening. We're at 103.37 up a buck. We did get as high as 105.19 for like a minute. 300,000 traded first 24 minutes. Not a lot to get excited about. So 105s for this Friday were my suggestion. If you can get a decent premium for 105s for this Friday, take a look at those. For next week Friday, you might want to look at 110s, even the week after. On the other hand, there's another strategy you can play on GameStop, and that's the strategy of you believe that they might go back into the 90s again. You think that they might test the 90, 95 range again. So what you do is you write $100 contracts or down to as low as $95 contracts or even 90s, writing 90s for this Friday or next Friday or the Friday after that. You're looking for book value, of course, plus time on top of that, as much as you can get premium on top of the book value. So if you're writing a $100 call on GameStop, let me take a look at these option trades right now. Hang on. Pardon me. Arrange my drink containers over there. Get my my big ass iPad to work over here. All right. So a 103 stock price, 103.46. According to my Market Watch quotes right now, a $100 call that expires this Friday on GameStop. I'm showing market of about 750, 850. That's a wide range, but 750, 850. So the call is worth 340. All right, let's round it up to 350. And the value of the contract is 750 to 850, which means that the premium, the time premium, the wristwatch, is about $4 to $5 for a contract that dies this Friday. All right. So if you write a 100 and you can get, say, $8 for it, somewhere in the middle of this range, just as a average, example only, you get $8 for it. If the stock drops to $95 a share between today and Friday, but let's say this afternoon or tomorrow, between now and tomorrow, the contract will be out of the money because the stock's at 95. This is a $100 contract. You wrote it in the money. Now it's out of the money. The value of this contract will drop dollar for dollar, more or less, as the stock drops under the 100 level. So if it goes down to let's say it goes to 100, it'll already drop about $2.50 a contract, just 2.5 of the 350. It'll drop right there, time value. If the stock goes down to 98, this contract will likely be trading something around the $4 mark or less, and you've already made half your money. And so there's a nice little trade. I'm not suggesting you write at $8 and don't buy it back and let it expire worthless. I'm looking for a trade, and if I can help you score a $4 gain on a contract, you can write 5 contracts or 2 or 6 or 9 or 15 or 20. You can score a $4 gain in a day or two or this afternoon, whatever the market wants to give us, then great. If I'm wrong and the shares want to go higher, and great, they want to go higher. They go to 105, 108. At 108, this contract is worth $8 book value, plus its time value until Friday. But it will only be worth $8 on Friday because it'll lose all the premium on top of the book value. So even though you wrote it at 850 and the shares were 103 at the time you did it, now the stock is 108. They're still only worth $8. In theory, you could buy them back for pretty well a break even. And the good news is your stock went up $5 a share that you own, and the contract didn't do anything. So you have that kind of protection. If the shares want to go higher to 110, of course, this contract is a $10 book value contract. You sold it for $8.50 or $8, whatever it was, and it's now worth 10. You have to buy it back for a gain. You have to buy it back at a loss to you. Well, let's say you buy it back for 11. It's dollar time premium still on it by Thursday afternoon. You buy it for 11. You've lost $3. Okay. You turn around and write a contract for next week, Friday, for 105. You're writing 105s against a 110 stock. You're still writing an in-the-money contract, looking for the stock to come into the lower 100s. And what are you selling it for? You're probably selling it for $12, $13. And there is the money you're paying to buy this one back, and you're writing a new one for next Friday, and you're still waiting for a pullback. Writing options, always writing options, and using the clock as your weapon of choice. Okay, just a couple of thoughts there. We talked this morning about other potential option trades. Goldman Sachs. Looking this morning to see what the stock was doing, I noticed Goldman this morning wasn't doing a heck of a lot. Right now it's at 368, 58 cents. I was talking about writing $370 call options expiring this Friday. They're out of the money. Go for a premium. Just cash it in. The shares stay here at 368 through today to tomorrow into Wednesday. Those calls will drop dramatically. You might make half your money just on the time depreciation. If Goldman, though, drops to 365, 363, anytime between today, tomorrow, or Wednesday, those contracts will drop more than half of their value, maybe 3/4 of their value. Try to get the best you can. If you want to write Goldman Sachs for a week Friday, more time premium, you're looking at 375s to 380s. The week beyond that, same thing, 375s, 380s. If, however, you feel aggressive and you feel that Goldman Sachs has a bit of a run in it, but it might back off a little bit, you might want to write 365s. You may want to write 360s. You're writing in the money Goldman Sachs calls that expire this Friday or next Friday or the Friday after for as much premium on top of the book value. Same strategy as I just talked about regarding GameStop. You're letting the market run up and you want to write into the money and look for a pullback. And if you can pull out $3, $4, $5, $6 a contract, you write a contract for 14, buy it back for 8, score a $6 gain per contract. That is $600 per contract. Right? 1, 2, 3, 4, 5. Quit your day job. Apple, 175s is what I'm looking at. Writing 175s for this week, or in the money if you want. If you feel that the stock might plateau this week and back off a little bit, you could do that. Or for next week, 180.85. So you want to write just in out of the money only calls on Apple because you respect the fact that it might go higher. Then you write 180s for next Friday or the Friday after that, and try to score as much of a premium as you can. And watch the time value closely. All right, Cisco, we're at 55.16 right now, unchanged. I'm looking at 57s for this Friday. You could probably even look at 56s. For next week, Friday, you can write 60s, 58s, 62s, somewhere in that neighborhood. IBM, I'm looking at writing contracts around the 140 mark. We're right now at 136.78. We were just around 137 a moment ago. Maybe 140s for this Friday, 142s to 144s for next Friday, or the Friday after that. Again, looking for premium as much as you can get with as short a time frame as possible to do the trade. If you write an IBM call for 3 weeks out, you might buy it back by the end of this week for a third to 50% less than you sold it for. That's the entire strategy. That's the whole plan. Get her. That's the whole plan. Get her. Sell the contract for $5, buy it back for $2.50. Don't care what happens with the stock after that. You don't care. You just want to make your trade. And then you sit back and wait for your next opportunity to write a 3-week contract again for time premium. Let it shrink. Get her. That's the whole plan. VANIC. I talked about writing call options on VANIC. These are poor man covered call strategies. I'm talking about pretty well here. I'm talking about poor man covered calls on IBM, VANIC, Cisco if you want, Apple, Goldman Sachs for sure. On GameStop, I'm talking about writing options against stock you got. But VANIC, you can write poor man covered calls, pick up deep in the money contracts. 90% of the value is book value, 10% or less is time. And then write 275s to 280 for this week, or write 280s to 285s for next week or the week after. Same thing on VANIC. Microsoft, 310s is what I'm thinking about writing. Look to write 310 contracts for this Friday, perhaps 310s for next Friday, or 315s for next Friday or the Friday after that. And then the last one is Facebook. Actually, Facebook itself. Now that the damage has been done, the annihilation has taken place. The stock's at 232 right now. It's been devastated. It's down $90. Pick up deep in the money contracts. Pick up 190s, 180s. Spend $5,000 on a contract, 5,500, something like that, and now look to write contracts for this Friday for perhaps 237.50s, 240s. Next week, 240s, 245s, 250s. I wouldn't be looking for Major downside from here. Yeah, there's $5-10 of downside kind of hanging around here, but I'm not looking at $30 more downside on Facebook. We've had that already. But I would be looking at taking in premiums if you can get them. So those are the trades we talked about this morning for the most part. I did mention also going long on SoFi calls, talking about buying $10 calls, in the money calls for next year, January's way out there. If you can afford 750s, even better for next year January on SoFi. Right now we're 12.20 on SoFi, up 31 cents. That's what we covered this morning with the Gold Bagel members. If you become a Gold Bagel member, you can join us every day before the market opens up. Before I start my 8:30 show, I usually do this show about a half an hour to an hour before that show to give you folks a heads up as to what trades I'm thinking about that you may want to look into. Changes every day. It varies. Some days are more exciting than others, but it pays to be a member of the Gold Bagel family because your differences be either being a $10 member to comment or being a $25 member to be a Gold Bagel member. For $15 more, you're getting 5 weekly updates prior to my regular show. And Wednesday night primetime, 8 o'clock, Q&A with Uncle Bruce primetime. That's the deal. 6 different add-ons for that $15 cost. Per week, 6 add-ons. That's 24 a month for $15. One trade could make it all worth your while. Thank you all for being supporters of this channel, however you do it. I love you. We're up 15 points on the Dow. We're up 12 on S&P. We're up 102 on the NASDAQ. And we're going to see how the markets want to play it from here. The oil price down $1.06 a barrel to 91.25. That's what we got right now. Rocket Lab holding a 28-cent gain to 978. High today, 981. 250,000 volume. Thank you, Rocket Lab. SoFi is sitting at 12.20 a share. The high today, 12.40. 8.7 million so far traded. We're up 31 cents right now. GameStop, 103.13, up 79 centinos. Volume of 368,000 shares. Matterport is at 850. We're up 12 cents. The high today, 884. The low, 837. We're at 850, up 12 on 2.9 million volume. ME, 490 a share, up 15 cents on 236,000. The low is 470. That was the opening. The high, 493 just a few minutes ago. We're 490. We're up 15 cents. It is looking better than a while. I'd like to see it break through 5. I really want to see this happen and get going. Spire is 281. We're near the low of the day here. 279.5 was the low a few minutes ago. 151,000 volume. We started the day at looks like 287. We got up to 294. Now 279 for the low. We're at 282. So the range is only 15 odd cents. We're down 7 right now on 151,000 shares. Spire has been inching back to this $3 level. It's just been kind of getting closer and closer. Hopefully we get through this little wave of selling and break through 3 and continue on. ATIP has hung around $3. It's been hanging around $3. It's 302.5 right now, up 1.5 pennies. With the low is 297, the high 306. So we've had a very slight 9-cent range today. 68,000 volume. ATIP is selling, is pretty well wrung itself out of the system. I think the market is waiting for its next report. Earnings will come out shortly. I think they're on the way up. I think their earnings are on the way up. Their hiring is on the way up. Their therapy sessions are on the way up. Their waiting list is long for treatment. The stock will go higher. In my personal, humble opinion, the corporation is doing better. Hopefully the stock will go up, and I'm pretty sure it will. But can't guarantee it, but let's hope it does. SmartRent, $8.12 a share, up 17 cents. Broke through the $8 barrier. We were down to $7.83 just after the opening. Got up to $8.31. We're at $8.12, up 17 on 25,000. This stock has run out of sellers. They have run out. And they're growing. So let's see. Sextera, 11.68, up 24 cents. Volume 6,700. That's it. 6,700. We're up 24 cents. There's nothing here. Nothing for sale. Low of 8.38. Now 8.68 on the stock. All-time high 12.79. We're $1.10 away. $1.11 away. all-time high on this stock. AMC up 16 cents to 15.51. Volume 7.2 million, kind of light. Robinhood up 16 cents to 15.02. 5 million volume, kind of light. Vanik up $3 to 275. Home Depot down 39 cents. IBM off 48. Microsoft down 2 pennies. Apple up 99 cents. It's doing a Wayne Gretzky today. Goldman up 36 cents to 367.96. Cisco up 6. Facebook down 5.50. Amazon up 85. Big ones. Tesla up 13.80. Google down 165. Bed Bath Beyond up 54 cents. BlackBerry up 8. Royal Caribbean is up now 442 to 80 bucks. 80 bucks. Way overvalued, but it's doing what it's doing. Norwegian up 128 to 21.53. Stupid. Carnival up $1. 21 bucks a share. Idiotic. They're bleeding hundreds of millions of dollars a month. No sign of that easing up, but I can't tell you. Target down $1.40. JP Morgan down $1. Costco down $1.30. Walmart down $1. And Video up 4. Walt Disney up 91 cents. What can I say? I can't. Stupid is, stupid does, and there you go. We're up 5 points on the Dow. 5 points on the Dow. 11 points on S&P. Up 117 on NASDAQ. Thank you all for being here. Nice to see you here. Austin, I'm number 292, Bruce, on the thumbs up meter today. I was driving in this morning, listening to your show. Are you okay? Who did you dirty years ago? I'm here for you. I'm good. I'm just Mr. Realistic today, I guess. I don't know. What can I say? Sometimes I just have to tell you what I think is really going on, and it's in plain English. What can I say? Anyway, there you go. DQ says, stock markets with Bruce. Cisco earnings mid next week, so we'll see how that goes. Good morning, everybody from Coyote. Thank you all. Yeah, here we go. Credit Savage, Zed, you get all the premium at this point. Zed is explaining what happens if you write a contract. If you're writing a call on SoFi for $15 and you score a 75-cent premium on it, that money is yours right now. You get it instantaneously. You can do whatever you want with that money. You're writing out of the money calls. And you can keep the money in your bank account inside your brokerage account and use it to either buy back these calls for hopefully less money as the time shrinks out on them, or you can buy up stock of SoFi or anything else. You can do whatever you like. It's totally your money. A lot of folks will sell these calls and just leave the money in the account. And then when they buy them back, say you buy them back at 30 cents, you clear 45 cents a contract times 10 contract, $450. That's now free and clear. That's your money. You have no obligation against those dollars whatsoever. Put that towards your credit card, or put it towards your gas bill or your phone bill, or go out for the night. Whatever you want. It's your money. There you go. All right. There you go. Oh my gosh, so much fun. When you sell these contracts for 75 cents, the first thing you do is you put in a stink bid to buy them back. So you put in a stink bid at 31 cents, let's say, just for the heck of it. In case the stock has a 150 dip, a $1 dip or something like that, those contracts might drop and have a quick dip. But you're putting in a buyer at 31 cents in case they go down there. You might get lucky and get them later today. You never know. Tomorrow morning, first thing, you get filled. You have that stink bid good for the rest of the week. You might get them back very quickly. You had no idea you'd get them back, but you got them, and you now scored this 40-cent profit. What are you going to do now? You're going to turn around and put in a stink offer to sell them again. And you put an offer in at 74 cents or 69 cents in case the stock pops a buck or something real quick. You get taken out, you sold them again, and then turn around, put in a stink bid to buy them back. Try to score another wave, and you're trying to catch waves, trying to catch the wave. Whatever it turns you on, it's okay. Anyway, what can I say? Yeah. Let's see what else is going on. Nazar says, I wrote some SoFi $14.50 contracts for this Friday for 26 cents. It's not much, but it's a safe bet, I think, for all the premium by the end of the week. So you're saying to the market, hey, you want my SoFi for $14.50? Come and get them. You give me 26 cents a share right now. That's 26 bucks a contract. I don't know how many you're writing. I'm writing 1, 5, 10, whatever. Give me $26 a contract. I'll let you buy my SoFi off of me until Friday's close at $14.50. I dare you. I double dare you. Come and get me. Come and get me. There you go. Jen is saying it. There you go. Credit Savage. You know what, Uncle Bruce? I love being in the casino, especially on days where there's lots of float and not much volume. Free money. 90% of the options die worthless. Time and numbers are on my side, baby. And there it is. It's a time thing. Jen, how are you?
I'm good. How are you?
I'm good. I've been ranting and raving all morning.
What's the rant
ranting
about this
and raving and just causing.
The post office?
No, I was complaining about.
Post office that says they've delivered things.
Yeah. No, I've been
not to where they're supposed to.
Yeah, I've been complaining about actually Facebook today.
Oh, what did it do?
Well, last week on Tuesday, they came out last week Tuesday night after the bell and came out with their earnings, and they were 25% off.
Yes.
And the shares dropped $190 billion of market cap off the.
Yes.
And they didn't give a pre-warning.
Oh.
They had to have known. This is the quarter from last October till the end of December. They knew in October it wasn't working. They knew in November the numbers weren't coming in. They knew the third week of December they weren't going to make it. They didn't give a heads up to anybody.
Right.
They allowed the surprise of a lifetime after hours to happen. The shares were at 325 on the close, roughly 323, 325, and they were at $250 on the aftermarket. People got wiped out of $190 billion. 100 companies that were also in the
that
were in the industry of high tech.
Yes.
They all got wiped out by 10, 20, 30, 40% in value because of the Facebook thing.
Yeah.
And we had $1 trillion of stock value just go poof. And I don't hear a single peep coming out of Congress for an investigation. Nothing from the SEC.
I don't think they're required to come out with a warning.
Well, let me ask you this. I mentioned this in the
They always leak about how the good numbers are, but I don't think they're required to do that.
I mentioned on this rant that ATIP, Physical Therapy, was a SPAC. They took over a public company. They took over a SPAC and became a public company, ATIP, Physical Therapy Centers. Within a month of that deal getting done and everything getting finalized, they released their quarter from the previous quarter.
Right.
And the CEO released the numbers, and they missed what the analysts were expecting. Just like with Facebook, the analysts were all up here, and Facebook came in down here. Well, ATIP had analysts saying this is how much they're going to do in physical therapy sales, and they came in down here. The CEO was immediately fired by the company, the top shareholders and the board of directors. He was let go. The stock went down by 50%, and within a week, there were 24 law firms launching full-blown class action lawsuits against the corporation for misleading investors and not telling investors what they should have known. This is the company. It was still private for most of the time. They were a private company most of the quarter. They went public, released their numbers as a public company, and then the lawyer stepped in. Facebook, crickets.
But is that because ATIP, the numbers that they came out with after rolling into the SPAC, were substantial information that should have been known to the SPAC buyers? Is that the difference?
I think the lawyers were saying all kinds of things. They were saying that. They were saying as a public company, you should have disclosed this. You as management had to know.
Yeah, exactly. And I think that they do disclose it when they come out, like Facebook, they come out with their set earnings. I don't think they are required by law to give you a glimpse. They don't need to lift their skirt and show you what's under there.
I think they are. I don't think so. If it's good for the goose, it's good for the gander.
That's why we have earnings reports. But the difference is that one was a SPAC, and so that's I can't think of the term, but it's a substantial information that directly affects
material.
It's a material information that people.
I think the same thing for Facebook. Facebook management knew. Facebook auditors knew. Facebook bookkeeping department knew back in November, halfway through the quarter, they weren't going to meet their numbers.
Right.
They were woefully short.
Right. But
This
have
didn't
they
happen
come
the
out-
last week of the quarter.
Has Facebook come out since November with the rah-rah machine telling people how great they are? See, now if they've done that, now you can catch them in a lie. But otherwise, they don't have to give you a peek.
I think they do.
I don't think so.
This is material. This is a material affecting the company.
It's a
This is
material change. But
affecting the company. They didn't correct any of the analysts who were literally upgrading the stock up until the last
Right.
week of the quarter. There were all kinds of analysts coming up with new projections of the stock trading values and so on. No one knew from nothing. Everybody
think it
was
might
wrong.
just be stinky, but I don't know if it's illegal. Stinky.
It may not be illegal, but it is ethically wrong. As you and I both know, when I became a partner of a brokerage firm, I became an options trader. I became a VP. I had to write all kinds of exams.
Yeah,
I had to do all these. I had to do all these due diligence exams. I had to
partner, officer, director.
I had to stay on top of all of the potential shenanigans that were going on out there.
Absolutely.
And I had to try to avoid that happening in the firm I was employed with, or I would be let go and terminated without cause.
Mm-hmm.
And with cause. I mean, I would let go with cause, with no benefits, no payouts, no nothing. You're on the street this second. Get out.
Bum.
Here, a company doesn't deliver earnings that are billions over short. We're not talking a couple $1 million out. We're talking 25% miss.
Yeah.
And it caused a $190 billion paper loss of the stock of Facebook plus $800 billion of everybody else around them.
Mm-hmm.
That's $1 trillion disaster. We're talking about one of the 5 largest companies on the planet.
Yeah.
One of the top 10 anyway. And there's no repercussions for missing like this. I mean, I can understand being a half a point out, half a percentage point out. That happens all the time. Mm-hmm. Stocks will drop 6%, 10% for a half a percentage point miss. Happens all the time.
Yeah.
So that's acceptable. But to miss by 25%, this is no. This is material. This is a massive material change that every shareholder of Facebook should have had a chance to know. Why is it the company released this information after the bell, when the only trading that would be done would be aftermarket trading, which is the wild, wild west, as we know?
Yeah.
Why don't they halt the stock at noon hour on the market, release their numbers, and then allow the market specialists to match up buy and sell orders for the next half an hour to an hour? Because on the stock market, on the listed exchange, they will not allow the stock to start trading if it's more than 7% down on the next trade.
Right.
They will allow the market another half hour to gather itself. But on the aftermarket, there are no circuit breakers.
But they all come out with their earnings after.
Not all. Some do be pre.
Most.
But I say.
Most of them do.
I say.
Because they take too long. They're not going to halt their markets
I
for
say
that long. In the
do
middle of
it
the
during
day.
the market and give the shareholders a chance, because you owe that to your shareholders. You have left them completely vulnerable to a 20% market price drop, 25% market price drop in one trade with no chance to even react to it. I think this is wrong.
I think it's stinky. I think the only thing that the SEC could do is go back and check into the trading patterns of those insiders and see if they were shorting. They were.
It's unlikely. The puts, it's unlikely that any insiders were doing any shenanigans like that, because the good news for the shareholders of Facebook is that the insiders are so well paid and so well remunerated. Right. They don't need to sell a couple thousand shares to pay bills for all their lure. Whereas with the Vancouver Stock Exchange and the Alberta Stock Exchange, we had 75-cent stocks, and we had insiders doing all kinds of shenanigans at 60 to 70, 75 cents because they were using the stock to pay their rent and their car payments. With Facebook at $325 a share, they don't need to resort to shenanigans to pay their mortgage payments. Right. They're doing very well, thank you, as part of a publicly traded, very profitable corporation up until that moment in time. And they're still profitable today. My only beef is, or one of my beefs is, of the hundreds of thousands of shareholders of Facebook, hundreds of thousands of small shareholders, some of which are trading on platforms. They only have a third of a share. They have a half a share. They have 5 shares. There are people out there with 10 shares of Facebook. That is everything they have in the market. And that stock was off 25% the next minute
Mhm.
without a scintilla of warning. And the company knew they were off this much
Right.
on their financials. They knew that every analyst was wrong. Every analyst who said, "Oh, they're going to make so much money per share this quarter, this much money," they knew they were wrong, and they did nothing as a pre-warning, and they knew for weeks, if not for a month or more. That to me is a crime. That to me is absolutely holding back vital information that shareholders have a right to know.
Is the other side also a crime then? If I'm Apple and I know I'm going to just blow my numbers out of the water, am I required to come out and give you a peek?
I agree. I think they should. I think the goose and the gander.
Absolutely.
Yeah, this is public disclosure of the markets.
But I think,
we are publicly traded companies on a public exchange.
I think they did their public disclosure.
Oh,
they did it when they released their numbers.
Look, I'm not arguing with you on that.
Yeah.
They're following the rules as they exist.
That's right.
But the rules that exist leave it wide open for abuse, where
Right.
people can get shellacked for
Well, or
no
if
good
you're-
reason.
If you're going to come out with your numbers after hours, which they all do, I understand why they do that. Don't let that trade after hours.
Well,
Like you say, let the mechanisms that are in there to protect those wide swings
where's the circuit
kick
breakers?
in. Where's the circuit
There is no,
breakers?
because
Right.
there's no regulation in after hours, and the industry doesn't want it.
So
The industry doesn't want any regulation. They want to take care of it themselves.
it's the
Well,
Wild
that's
West.
the Wild West, and you got it in the pre-market and the
Yeah.
aftermarket, and it's
and
completely
there are
wide.
people out there who made a lot of money on this.
Yeah, there are people who made money on the put side.
Who said,
Call option
Yeah.
people lost everything. The
Yeah.
writers were laughing
Yeah.
because they got their they got buy
Right.
options back for nothing.
Yeah.
Not that they thought that the stock would drop 25% in one trade. Who
Yeah.
thought that? A
Right.
$1 trillion company?
you look at
Come on.
Facebook, they've been too busy reporting to Congress to do their business.
Or have they?
So time they
But
Time
not
they
reporting
did
to
that.
their shareholders. Look,
Yeah.
Matterport and SoFi and not even SoFi, Spire, they came out with pre-first quarter updates.
Right.
2 weeks. They said in 2 weeks we release our financials.
Right.
We're letting you know today our numbers are higher than we thought.
Right.
Just like you asked me,
Right.
did Apple do that? No, but
Yeah.
the little guys are doing it. These little tiny companies, ATIP.
But-
I can tell you, ATIP since that debacle where they got rid of the CEO. Every quarter since, it's been 3 quarters since that guy got dumped. 3-quarter reports. Every time, 2 weeks or a month before the quarters are due,
Mhm.
the company is releasing their financials already. They're giving us a preliminary peek.
Right.
They don't have to do that, but they're doing
No.
it because why? They got 12 law firms going after them with lawsuits.
Well, plus they have something that they want to report. You've often said how the Apples and the Googles and the Facebooks of this market, every day they have something to talk about. The little guys have to talk just to be heard about the din.
Get the pin,
Right.
get a peep out.
So for
Yeah.
them,
Yeah.
they've got their promoter, their advisor saying, okay, this week we're going to say this, and this week we're going to do that. They got their Instagram and their social media.
That's
It's all
what
set out.
That's
for
what
the
they should be
month ahead.
doing.
And
Exactly.
it's what they should be doing, but they don't have to
No.
from a
Regulatory point of view,
regulatory point
No,
of view, but
no.
they have to from an advertising point of view.
without
They've
question.
got to keep
Investor
their name in
relations.
front of your eyeballs.
As far as an investor relations program, this is what you got to do as you're a
Yeah.
small company. Apple chooses to release their financials only when they need to.
Right.
And unfortunately, by doing that, they cost hundreds of thousands of their Facebook. They cost hundreds of thousands of their shareholders dearly. And I'm worried.
And that's not going to be forgotten.
I know.
That is
And what
not
I'm
going to be forgotten.
and what
by
I
the
mentioned on the
shareholders.
rant this morning was I wanted to know, and we'll never know this number, but how many thousands of investors out there that had stock in Facebook,
Mhm.
Snap, Twitter, Pinterest,
Mhm.
eBay, all these other stocks that were affected between 5 and 50% each with the Apple,
Mhm.
the
Facebook.
Facebook debacle. Okay, they were caught up in the Facebook meltdown, the tsunami
Right,
that
they're-
drowned everybody.
They're in the river.
How many thousands of investors got margin calls the next morning and were sold out?
Oh yeah.
This is no fault of their own.
No.
This is information that should have been out there. Because why would Peloton, not Peloton, but Pinterest stock go down 40%? They did nothing wrong. They didn't lose 20% money.
Right.
They haven't even reported their financials.
Right.
But the panic created by the tsunami wave,
Yes.
by this surprise announcement with this aftermarket trading has no circuit breakers. There's no protection whatsoever. You are completely vulnerable to complete sellout. Now, you can say, well, it's their fault for being in the margin. It's their fault for dealing with that broker. It's their, yeah, but is it?
And for the companies like Pinterest, yes, you got hit by the river, but you're swimming in the river.
Yes,
You
are.
put yourself in the river, and you don't complain when the current brings you up.
When all the tide raises all
That's
boats.
right.
Well, this one crashed.
That you can't just cry when it goes down.
Well, again, I come back to the Congress having an investigation into GameStop.
Oh, SEC.
The Congress,
just
the
put them in
congressman
the bag.
putting the heat on GameStop and GameStop shareholders, these retail investors who had the audacity to buy stock between $2 and $20 a share, and then think of actually wanting to sell it for $300 a share after a short squeeze. Well, we have to investigate this because there are some shenanigans going on here. Obviously, there's something wrong. And even Wall Street was in favor of this investigation.
Yes.
After all, we've got to investigate these so-called Wall Street bets people talking to each other about the possibility that a stock might go up on a short squeeze. But when it comes to $1 trillion stock meltdown from the close of Tuesday to the opening of Wednesday, oh no, there's nothing to investigate here. This is absolute normal. Everyone has to handle it. You have to accept this kind of trading as normal.
Yeah.
You have to accept $1 trillion meltdown as just normal course business. You know, when we saw the 22% meltdown in one day, the entire value of the stock market wasn't $1 trillion back then.
That's right.
It was a huge amount of money versus what it was. Inflation adjusted, it would have been trillions today. There were investigations. There were all kinds of... Oh, yeah. And the Federal Reserve dropped interest rates immediately and released funds into the market to save the economy because the world economy was on the brink of complete shutdown.
So if I halt stock on the regular market, does that halt it in after hours as well?
It can be, yeah. Yeah, it would, yeah. The company can request a halt, yeah.
Okay.
They did nothing. Facebook did nothing. Facebook didn't even request a halt to the aftermarket trading.
Yeah.
They did nothing.
Knowing that they don't have circuit breakers. Knowing that there are no circuit breakers after hours.
They knew there's no circuit breakers. Now, Facebook could say, well, we didn't know our stock was going to be down 25%.
Well,
we didn't know.
If they say that, then no one should ever invest in Facebook because they're idiots.
They're idiots. and the brokerage firms that advise Facebook and get paid millions of dollars in advisory fees, they didn't do anything.
Oh, and those
Did
poor
they step in?
they're dancing as fast as they can with their clients.
Carnage. Complete carnage. If I were the chairman of the president of Pinterest, I would have requested a halt on my stock in the after hours because it's affecting my stock.
Right.
This is ridiculous. We've done nothing wrong. Why should we be in the middle of a meltdown on Facebook?
And they should have been. They should have been all over this
Nobody
story.
did a thing. No one did anything. Why? Because they don't have to. Because again, this is the excuse.
Doing any of them any favors to have their markets dump like
Correct.
this. It does you no favor.
Correct.
So why wouldn't they have done it?
And this is why Bruce, speaking in plain English, asks you these questions. Why doesn't anyone do anything about it? There's only investigations when Congress can get on the camera and look good. But will Congress look good going after the industry that pays them all this money and super PAC money to get reelected? Are you out of your mind? They're not going to investigate this. They're going to go after their friends. They're not going to do it. It's just ridiculous. Absolutely ridiculous.
Would you like a bagel? Have you worked yourself up into a nice little ulcer attack here?
I'm interested in a bagel today. We got these everything bagels. Mm-hmm. We had to buy the everything bagels. There were no sesame seeds, so I can't have a grape jelly bagel with everything on it.
Well, you could, but it might be odd.
Do we have ham?
We have ham. We have cheese. We have cream cheese. If you would just like a sheet.
Or how about
Or
Yeah.
you can have the full meal deal.
No.
You can have the.
I can't go that far. Let's
Okay.
just do a shmia. Yeah,
Okay.
we'll do the shmia today. Thank you. Okay, fabulous, Miss Jen.
Take a breath. Okay.
Breathe, 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 breathe. Oh gosh, you guys, are we having fun here or what? I don't know. I don't know if you're having fun. I'm so busy ranting and raving, I haven't had time to read the comments. Thank you guys for being here. It's nice to see you here. Hope you're doing all right. Hope you're making money. What can I say? Cindy B, I sold a 110 GameStop for 370. I bought it back for 280. I hope it pops again. There you go. Nice. We're up 120 on the Dow. Yay! It's the high level of the day. Yay! What else is going on? We've got S&P up 19.8, NASDAQ up 94. Lovely. Let's have a little run here. Rocket Lab's up 22 cents, holding 971. SoFi holding 1206 right now. It's up 17. GameStop down 37 cents to 101.97. Gone as low as 101.02, and now we're 101.97 on 525,000. Matterport down a dime at 828. We got ME up 12 cents to 487. We're up. We're down a dime on Spire. We're down 4.5 cents on ATIP. We're up 22 cents on Smart Rent, 816. We're up 15 cents now on Sextera, 11. Make that 18 cents, 1162. AMC down 2 cents. Robinhood down 33. Vanik is up 270. Home Depot up 136. IBM up a dime now. It's gone green. Microsoft's green up 39. Apple is still green, up 140. Goldman up $1.03. Cisco up 14 cents. Facebook down $5.95 to $231. Amazon up $91 to $3,243. Tesla up $4.86. Google down $4.53. Remember, it will trade and it will split 20 to 1 by July, which means right now it's at $142.50 post split at $28.53 approximately. Bed Bath Beyond up 51 cents. BlackBerry up 4. Royal Caribbean up $4.80 to $80.41. Ridiculous. Anyway, there it is. The Dow is up 115. I don't have the reason. Anyone have a reason? I don't have a reason, but it is up. We are definitely higher. A third of a point for the Dow, 0.4 for S&P, and 0.64 for NASDAQ. Pardon me. We've got right now the Russell 2000 up 7.9 points. That's up 0.39 of a percentage point, kind of what the Dow is doing. We got VIX now negative, which is a good thing. The fear index is falling. It's 22.76, 22.76 down 0.46. So that's improving. The sentiment has turned a little bit here. So that's very good. Let's see. Let's see. What else? Just watching any other comments here to see what's happening. Nothing really specific. There's company-specific news. We know about Spirit and Frontier Airlines merging into one. That will create higher prices for Americans. We've got not much else to go over here. Just kind of watching everything going through here. Thank you for 340 thumbs ups. I appreciate that. It's nice to see you giving us 341 thumbs ups. Appreciate that a whole lot. Peloton right now, $30.22. The high of the day, $32.22. The low, $29.33. So it looks like this $30 neighborhood is kind of what people are thinking about. If Peloton is going to be taken over, could it be taken over around $30 a share? Is it even feasible that Peloton will be taken out at this price? That would make this an $8 billion acquisition that with a company with about $1.5 billion in assets over liabilities. What is the value of this company to another brand with its built-in client list? Although business is backing off right now, what's the deal here? We'll see if there's any interest from anyone else out there or not. The low of the shares so far in this 52-week run, 22.81 was the low. The high of Peloton, 155.52 at the height of the frenzy for this virus. So now at 30, this might be it. Maybe the stock can only generate a $25 buyout offer. Maybe that's all it'll get. On the other hand, maybe someone will come at them and say, "We'll give you $10 share in cash, and we'll give you $25 in stock." That's a $35 offer. Maybe that will be thrown at it. We may have all kinds of offers thrown here. You never ever know. It's wide open. There may not be a single offer. There you have it. Those are some of the stocks that we're following and what's going on here. Lots of downgrades going on right now. Teladoc cut to 80 from 120 at Bank of America. Uber cut to 50 from 80. Lyft is cut from 46 to 46 from 60. There's just all kinds of adjustments being made at all times. One never knows. GameStop right now down to 101. 51. I think we might be at the low of the day on GameStop. 101.61, 60 something. The low is 101.02 at the moment on GameStop. So we hit the low around 10 something, and now we're approaching it. Kind of approaching it on 545,000. It's a quiet day, and this move of less than 70 cents. We got a nothing burger going on here. SoFi up 15 to 1204. Rocket Lab up 19 to 968. The Dow up 113 right now, at just short of the high of the day as we speak. Matterport off 7 cents. We bottomed out at 809. We're now 831 again. A little bounce back here. ME holding a dime gain. The low was the opening at 470. The high just 20 minutes in at 493. We're at 485 on ME. So it sure looks like ME has an upward bias to it right now. Is it a dramatic, we're going to double in price bias? No. But it looks to me like the stock wants to get back into the 5 neighborhood at 484. There's a psychological barrier we have to go through here, and we'll see if the 550 level is where it's headed, or 6. Or, you know what, ME, just say something. Give us an announcement that we can chew on. Give us something that we can contemplate for your future endeavors. Anything. Again, that's what we want from all of these stocks. Just talk to us. Tell us why we should believe. Just tell us why we believe. Why is it you folks who run these companies go to work every day? What is it that makes you go in there and run these companies? What is it that you're expecting? What is it you're trying to build, dream of? Share with us your hopes, dreams, and aspirations. Let us dream with you. Anything. So anyway, there you have it. What else is going on? What else? Yeah, here we go. Yes, like clockwork, says Credit Savage. The algos came in when SoFi hits around 5%, and wham, there's a first hit. I'm already making money. I'm up 20%, just like that. Oh, Royal Caribbean has a 5% pop. Time to buy an $80 put. There you go. Absolutely. Let's see. Let's see. Let's go. It takes a Canadian to call shenanigans on the U.S. market. Food fight. I want to see Uncle Bruce get worked up. He slams his bagel on the bed. This is an argument. This is adults actually having a discussion. There you go. See, people, it's okay to disagree. This is awesome. Fired Up Bruce is my favorite Bruce. Let's see. What else is going on? Yeah, I agree with Uncle Bruce, says Gayodi. It's not criminal, but it's shady and a poor move to do that to your investors. They left them out to dry. Let's see. They can have an entire congressional hearing to grill a Redditor, but companies can do things like this. Blows my mind. Exactly, says Gayodi. Here we go. I'm glad that someone else has noticed that the disclosure to shareholders appears to be lacking at best. Let the investors take a hit so the big boys backing you don't get eaten up. I know that's reaching, but that's how it feels. Let's see. Let's see. Let's see. Do-do-do-do-do-do-do. Do-do-do-do-do. What else is going on here? Any more comments I need to read here? A lot of folks talking to each other, which is wonderful. Thank you guys. And let's see. What else? What else? Auntie Jen holding her own. She does. Uh, Uncle Bruce, you got a tan? uh, how dare retail investors talk to each other about a stock? Only the rich are allowed to do such a thing at their parties, at their fancy dues, at the club. Only at the club, in the cigar room, Only there are you allowed to talk about stock. That's where it's allowed. That's where you have sophisticated talk with sophisticates. Good morning, says Ben. Good morning. GameStop volume is less than 500,000. Probably a lot of those people are in the cryptos today. I don't know about Peloton, says Cheddar Stacks. Momentum is hard to time in this market. Buyout news has a running hot momentum. Let's see. What else is going on? Cindy is saying my Spire option for February the 18th went up like 24,900%. It's now worth $5. Ooh. I've been writing covered calls this morning. Hello, intellectual, says Bama Babe. What are your thoughts, Midnight Adventure? What are your thoughts about buying a year out SoFi in the money with plans to exercise? I don't have enough for 43 shares of SoFi. I need to be at 100, but a year would give me more than enough time to exercise. Well, nothing wrong with taking a long-term call. Definitely. Unfortunately, right now, SoFi $11.99 up a dime. But then again, fortunately, it's on sale again, so maybe that's a good deal. How about that? Okay. Let's see. Oh, Pickcomb says internet finally started working. Good morning, everybody. Let's go. Thank you, everybody, for your comments and for being here. We have the Dow right now up 85 points. We just went through a little sell wave, and we're back up again. We've got S&P up 10, and we have Nasdaq up 58. So a little better there. We've got Rocket Lab up 17 to 966. The high of the day now on Rocket Lab was 987. Trying to get back to 10 here. Not yet. SoFi 1203. We're over 12 again. GameStop 102.22 down 12 cents. We're coming on. GameStop is coming on a little bit. So an opportunity to perhaps write more calls or whatever you want to do. Matterport down 11. ME up 13 to 488. Aspire down a dime. ATIP off 5 cents. Smart Rent up 18 cents to 812. Sextera up 17. AMC down 4. Robinhood down 40. Vanik up 199. Home Depot down 2. IBM down 9 cents. And Microsoft down 41. Apple up 84. Goldman up 74. And Cisco unchanged. I mean, it's quiet. Facebook down 581. Amazon down up 66. Tesla up down 3. Google down 12. So it's pretty flat here on a lot of issues. An 89-point gain on the Dow, but that's only quarter of 1 percentage point. So there's not much to really talking about there. Well, we'll see how this all wants to play itself out. Welcome one, welcome all to the show. Like I said earlier this morning, sell into strength. Write call options into some strength here because the markets aren't going anywhere at the moment. So we're going to have a time depreciation game being played here. So you want to write calls that have depreciation coming from a time point of view. You may want to write in the money calls on some of these issues to be aggressive about it for Friday or the Friday after or the Friday after. Grab a book value plus a premium and bet on the stock backing off of it. That might be a good plan. You can always do rollovers if you're wrong. Anyway, there you go. Let's go. An Apple bid for Peloton would be a strategic block against Amazon, Nike, Disney, says Wedbush. I don't know why Disney would want to buy Peloton. I don't get it. Yeah, I'm not sure. I mean, I can almost see a game company like a game a gaming inventor buy Peloton? Ask me why. I'll tell you why. Because Peloton has produced the rowing. I guess they produced the rowing machine, the bike. Who knows what else they're going to do? They got the running track. So if you have a gaming company buying up Peloton, you can merge games into the Peloton equipment. So you're part of the Peloton in the the greatest bike race in the world in France. You know, the Tour de France. I'm thinking about the France bike race. What's that dang thing called? Oh, it's the Tour de France. That's what it's called. You could be in a pretend Peloton. You could be in a breakaway. You could be in a in a game, a video game where you're chasing bad guys on the running track. You could be on the rowing machine, rowing against I don't know what, Cambridge. I mean, there's just endless ways of incorporating fantasy games into a Peloton system, so that you're not just pedaling with an instructor who's yelling at you. You're pedaling with an instructor who's in a game with you and everyone else. There might be a game starting every 5 minutes around the hour, live with 500 participants, and you're all in a bike race. That's a 10-kilometer bike race, 20, I don't know how long, whatever. And it's going over terrain, and all of you find the same, you have the same resistance levels and the same curves, and all depends on where in the Peloton you are, and you're passing fellow bikers and you're being passed, and that could be the future of Peloton. Maybe that is an area where there'll be a gaming company that'll buy them, that will then incorporate their gaming systems into the Peloton systems over the next number of years. And that takes the company another direction away from the workout idea only. With these Oculus glasses, eventually it'll be a 3D experience. I'm just throwing it out there. I'm just an old man that doesn't know anything about this, throwing out the idea of who could buy these guys and why. Maybe Apple would do that. Maybe Apple would buy these guys. Maybe Microsoft would buy these guys. They just bought Activision. Maybe Microsoft would buy Peloton to put it into the Activision world, to take it to that level. The dollars are there to convert it and grow it out. The seedlings of the business is there. They produce the product. They've got the clientele. They can offer everyone upgrades. I mean, I would suggest Tesla could have bought these guys because of the on-air updates, but Tesla's not in the exercise business. They're in the electric car business and the solar business and everything else. So Tesla's out. But a visionary, somebody who's thinking, could GameStop buy Peloton? Merge GameStop stores into Peloton centers. In other words, you have 4,000 locations of GameStop around the world. Why don't you buy up Peloton? And maybe every 10th store, every 10th GameStop store adds Peloton to their retail offering. They might have to rent more space to make room for it, but now you have a Peloton system inside the GameStop system. You can come and pick the bike up right at your local shopping mall, and you can get the upgrades there, the latest games there. I don't know. I'm just throwing it out there. And of course, maybe 3/4 of the sales of Peloton for GameStop will be over the air, right? And delivery at home through their distribution centers they have around the world. So maybe GameStop buys Peloton. Why not? Why not? Why doesn't GameStop go to Wall Street, talk to Jeffries, raise $2 billion in cash at $100 a share, and or raise $5 billion cash doing a bond offering at 3% interest, and do a cash stock offer to take over Peloton and absorb Peloton into GameStop. Now GameStop and Peloton are one. All the shareholders are one because they both own each other's stock. And you've now taken Peloton to another level at retail and online distribution and gaming exposure with the the software talents of the Peloton people and the GameStop people. I think it would make more sense than having GameStop merge with AMC. It would make a lot more sense. How you doing?
Those two companies have nothing to do with each other.
AMC and Game. I know
Rather
that.
just
I've been saying that
I
for a
mean,
year. I've been getting slammed by people by saying that for a year.
But GameStop and Peloton
Yeah.
at least have like a software commodity.
Yeah.
exchange.
Yeah, and you and I were in Scottsdale with our daughter, and there was a Peloton store there.
Yes.
And I went into that. We went in together, as a matter of fact. I think the two of us went into the Peloton
Yeah, I
store.
think so.
Or I
I'm
went in
sure.
with my daughter. I went in with the daughter. I don't think I
Okay.
went with you. In any event, the Peloton store was there, and so was GameStop. They were there, and they had a 1,500 square foot store in that place. It was a high end mall.
Yeah.
But I think now, going forward, I think Peloton and GameStop, every 10th GameStop store could become a GameStop / Peloton center.
Mm-hmm.
Some of the stores that are 400 square feet, 500 square feet, no, they wouldn't be able to do it. But if they, over the next 2 years, GameStop were to take 1/10 of their stores, increase their footage by 600-700 square feet, and add Peloton in. Now you've got Peloton systems, the rowing machines, the running machines, the bicycle machines, and all the other machines, and then you have the Oculus glasses for 3D enjoyment, and you have game companies making games on the Peloton systems,
Right.
so that you're literally in a bike, or you're in a Tour de France.
Right. I think they do
On
that
your-
already. But yes, you could make games. You could have the games incorporate the Peloton somehow.
Somehow, yeah.
Which I'm sure they could do in one night's work.
And I was also speculating, well, Microsoft could buy them because Microsoft just bought Activision, $70 billion bet.
Right.
Well, Microsoft could scoop up Peloton for whatever number of
Is
billions. of
Peloton
dollars.
on the
Traded public.
Yes, I know but are they for sale? Have they?
There's
said that they're for sale?
the story is out that the speculation is out that they're a takeover target. That
But
there's
why?
rumors because
Do they
on
not
their
control their shares. Or?
on their own they are limited to their marketing, but as a part of Apple or a part of Amazon,
Yeah.
Nike,
Right.
I say Microsoft and GameStop, as any of those corporations could take Peloton to another level.
Okay.
And from GameStop, I'm saying another retail level and online distribution because of the warehouses that GameStop has built. Amazon, of course, online distribution worldwide. Apple, because of creation, the what they can create on the screen for the Peloton people. Activision through Microsoft, absolutely the games that could be
Yeah, I
created.
didn't know Peloton was actively.
They're apparently in play.
Searching.
They seem to be in play.
Yeah.
And they're at $30 a share today, up 549. The low of the stock was 22.81, the high 155 at the height of the virus, and they're now at 30.05. Volume today is 45 plus million, 47 million. So yeah, I just looking at the market cap of Peloton is 8.1 billion. The market cap of GameStop is 7.8 billion. The two are compatible.
Mm-hmm. Mm-hmm.
They could become one. The number of shares outstanding. The shares outstanding on Peloton are 300 million. The shares outstanding on GameStop are 75 million. So if GameStop took over Peloton, say you get one GameStop for every 3 Peloton, that would be $33 a share because GameStop's $100 a share.
Yeah.
Then that would increase the number of shares outstanding, by 100 million.
Yeah.
But what I'm thinking could happen is GameStop with Ryan Cohen could easily contact Jefferies and Company, raise a couple billion in cash, 3, 4, 5 billion in cash, and then make a cash stock offer.
Mm-hmm.
So half in cash, half in GameStop paper.
Mm-hmm.
And now you got Peloton, GameStop as one shareholder group, and it's now one big machine. Within 6 months to a year, the two would be fully integrated with each other, and it could be quite an interesting partnership. And for the critics of GameStop, they would then go, oh, well, there are sales here, there are customers here, and it's the
Peloton
demographic.
has its own criticisms too.
Of course, but maybe two lemons can form some nice lemonade.
Make some nice lemonade.
I'm just trying to help out,
I'm just saying.
I'm just saying, I'm an old man. I'm just saying, I don't
Just
know.
spitball.
I'm spitballing with you, kids. Thanks, Jen. I got my schmear. I got my bagel with my schmear on it. You gotta love it. Thank you all for tolerating me today. I'm in a fine mood. I'm happy. I'm fine. It's so okay. I'm good. I'm excited. Hey, what would that be? Would that be neat? I have 100 shares of AMD. What's a good play on the stock? Premiums are not real high. Look, if the premiums aren't real high, you're not going to get rich on AMD. If you have 100 shares, you're not going to get rich. But look, you want to write a call that's good for a month or two on AMD, a few dollars out of the money, whatever. What's wrong with that? Take the rent money, because that's what it is. Oh yeah. There's a chunk of bagel missing here. What happened to that? That's kind of weird. Anyway. Oh boy. Uncle Bruce, selling in the money for GameStop is good for share owners. But what about us poor man covered call writers? Should we be more conservative? You don't have to be conservative. You don't really. I mean, if you're going to write an in the money call on whatever stock you have options in, you're looking for enhanced revenues as well. I'm talking about the idea, for example, if you're going to write an in the money call on, let's say, Goldman Sachs, because we've talked poor man covered calls on Goldman for months. If you own a $300 in the money call on Goldman, and the stock is trading at $370 a share, let's just suppose, and you think that there's potential for the stock to reach maybe the 360, 65 neighborhood. Okay, little pullback. You can write 370s that are at the money, 375s that are out of the money, or you can write 360s that are in the money. You can write 355s in the money. You're not looking for the stock to go to 355. You're looking for the stock to go from, say, 365 to 361, 358. You're not interested in going, you don't think it's going to go 350, but you're writing the 350. Why? Because you're taking all that book value and the time premium on top of that book value as cash in your account right now. And you're putting in a stink bid to buy back that call for a set profit. Now, if you sold it for, let's say you sold it for $17, just a crazy number. It's a 3-week call. You got $17, $18 for it. You might put in a buy order for $13.05. You're happy getting a $4 or $5 profit on your trade. That's all you wanted. So you put that trade in there. You don't know, I don't know, is there going to be a mid-market dip on the Dow of 250 points? Look what happened with the Dow Friday night. In the last 30 minutes of the day, we were up 225. Great day Friday. It was great. We lost 20 points by the time it was all over because of a algorithmic sell program that I say happened. Others may say, no, that didn't happen, but the stock did drop. The market dropped 250 points. You may find that the Goldman call you wrote, the 250 at when the stock was at 265, 15 in the money plus premium got you 18, 19 bucks, whatever it was. The stock might drop $7 in the last half hour of the day just because the market is dropping like it's dropping. You don't know. You've got a stink bid in to buy that call back, and you score $4 or $5 on that contract, you're a happy camper and get ready to do it again. That's a poor man covered call strategy. There's nothing wrong with that. Nothing wrong with that at all. It could be the next day the stock is up $5 again. You don't care. Okay. Let go back up. Right again. You can take rides all over the world at Peloton. Pretty cool to see. There you go. Apple's been building a health platform for years. They have no need. Okay, fair enough. I own 100 Peloton, average 27. I'm willing to gamble. There you go. Escape from The Walking Dead during a bike night. There you go. Cool. Fantastic. SoFi is trying something. It's up to SoFi now 1208, up 19. A Tour of France? Jennifer, that's my mindset as well. Alexander, thank you for this donation. Uncle Bruce, enjoying a homemade sourdough bagel with farm-style cream cheese. Oh, you dog. In your honor, hoping for a green day. Cheers to you, my friend. I'm not enjoying that quality, but it's okay. Oh my God, GameStop's not going to buy Peloton. Good morning, Bruce and Jen. Great conversation about Peloton. I don't think Peloton's very interesting other than the existing Peloton customer base. That's the buy. Beyond that, Peloton isn't unique. It's all good. I'm just throwing out possibilities. There's never an end. No end to it. Well, look at that ME now at 490. It's coming back on again. Oh my. Welcome everyone to the show. It's nice to have you here. Maybe AMC should buy Peloton. Let's go crazy. Oh man. Don't think Peloton would want to merge with AMC. A little too much debt for Peloton's liking, I think. Peloton, $30.12, up $5.52. Let's get nuts, says NTPC. Let's get nuts. Are we all squirrels now? Oh boy. We're up 51 on the Dow. We're not going anywhere fast, are we? Up 100 something, now we're back to here. Kind of wonder how many gamers own Peloton equipment and have used both businesses, GameStop and Peloton, for purchases from time to time. I mean, what kind of a overlap is there? I don't know. Dow's up 39. Mm, 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 mm. Yeah. That bagel hit the spot. Mm. Rob, Rocket Lab buys Peloton. And you can ride around in space. Whoever finds the Tesla Roadster wins first ride to space. Alberto, Rob, hells yeah. Or how about Peloton integrates Matterport into its bike ride experience? How about that? Hmm. Splayer, I think here in Germany, nobody knows Peloton, at least from the most gamers that I know. Michael, that's what I said, Andy. Matterport Disney, if Disney is serious about if that is, Jennifer. Okay, Alberto, joining you with the 100 Peloton. There you go. Alberto's saying, Jen, we're going to make money. We're going to make money. Well, again, I'm just, I don't want to do. There we go. We were down for a second. I don't know what's going on. The Peloton stock right now, $30.01 a share. Does anything happen to it? Who knows? Um, Effectively, $9 billion market cap at the moment scenario. Um, this is why my guess on Peloton is I would be taken over by a very large cash-rich corporation, but it could be an acquisition on a stock basis. And if I were GameStop, uh, what I would do with these guys is I would put together a package deal that would be something along the lines of I would raise, say, $3 billion in cash, $3 billion through a bond offering. This would be GameStop. They have the $3 billion plus 1.5 they have now. They have $4.5 billion in cash. Right? They go to Peloton and say, "Here's the deal. We've raised this money, and now we're going to take you over as a shareholder of our company." So you get one GameStop. And we're down again. Sorry, we're back. I'm not sure why this is happening on my system, but it is. In any event, 100 million shares into the market to acquire all. So now 180 million outstanding total between GameStop shareholders, Peloton shareholders. Raised $3+ billion in cash through a bond offering. sitting on $5 billion. So now the combined company has GameStop has $5 billion. Peloton has $1.4 billion in cash. Combine the two. 6 months forward, and to modify GameStop stores, close rubber that are GameStop combined, and we're down again. Here we go. We're back again. And so you end up with a very well capitalized public company, lots of cash, $6+ billion in cash. Less than 200 million shares outstanding. 500 will be Peloton on GameStop centers, perhaps. Canada, Britain, Australia, fair enough. And of course, the warehouses of GameStop. So you're going to consolidate the warehouses between Peloton and GameStop. You'll figure that out. Consolidate the staffs. We'll figure that out. So that separate companies, one listing, not two, and on. And on we go. And now we're looking at working agreement with software developers and creators for games, to ride the bike. And can you theoretically enter a bike riding competition on your Peloton through some kind of an organized campaign, some kind of organized race that is coordinated by GameStop through their software, through the new, all the techs they've been hiring, and you offer prizes. You offer crypto as prizes to participate, and whatever, or you pay crypto to get in to be able to ride, and then you're a participant in the game with a crypto payment to GameStop Peloton. And then there are prizes for various categories: daily prizes, segment prizes, weekly prizes, monthly prizes. Who knows? I mean, I'm just spitballing here. I'm just throwing stuff out there. There is a potential scenario somewhere that might actually work between these guys. There might be something to it. I could also see Best Buy buying Peloton. I can absolutely see Best Buy. Best Buy buys Peloton, and the Peloton store is in all Best Buy stores. There's a little division, like there's an Apple store inside Best Buy. Now there's a Peloton store inside Best Buy. And the unit is available physically at these locations and online, and the software is available online through the Best Buy Peloton network. I could see that. I'm just saying. GameStop should surprise the markets buying out another company. What's the plan with $1 billion they're just sitting on? Like I just said, raise more. That's what I heard. That Cam, good morning. I'm number 363 on the thumbs up meter. There are so many other cycling apps that sell only the app subscription, and you use your own gear. These are preferred by most cyclists. Peloton for trend buyers, future laundry racks. Not a happy camper there. Splair, is it only me or is Uncle Bruce's network freezing? It is. What's with the audio? No, he's frozen. Uncle Bruce. If Peloton put a platter of cupcakes on their screens, people would be losing all the weight, chasing it down like a donkey chases a carrot on a stick. You need a break in the talk. Peloton's freezing your network. I cannot do a machine. Motel 8 Wi-Fi again. 100 million shares. Zed, Algebras, your Poochie internet is powered by Peloton. It's hard to listen to that. Hopefully we're better now. Let's see. Obviously, the hedge funds are conspiring against Uncle Bruce, using their inside man at Cox Cable to interrupt the feed. Have you turned it off and on again? Games that require special equipment have a rough go for it for the last several years. Rock Band, nobody wants to make the instruments. Skylanders, And other toys to life games have mostly faded. Both have had recent chatter, though, with Activision acquisition. Fad again. And exercise bikes time to laundry rack is 3 weeks max. Tiff, just joined 20 minutes ago. Is Uncle Bruce not serious about the GameStop buying Peloton talk, right? He's not serious, right? Let's see. What else is going on? DraftKings could buy you net on. You could bet on your race. There you go. Let's see. Uncle Bruce, not sure it was already discussed, but I read that Ryan Cohen's RC Ventures gag orders ending on 2/9. Do you think this will impact GameStop at all? Perhaps he'll buy more shares. 2/9. Well, that's in 2 days. Alex, I have no idea. Uncle, the chart you're using is amazing. We need to see these figures. Thanks. Again, I'm just throwing stuff out there. I'm just, whatever. I don't know. We'll see. Here we are. We're up 51 on the Dow, and we're ahead 2.75 on the S&P. We're up 13 on NASDAQ. We've been better, but here we are. That's where we're at. What can I say? Just reading headlines right now. Opinion piece that says that West has finally begun to think like Ukrainians. Russia must be stopped here. Congress moves to prevent government shutdown before February the 8th deadline. So there's that. Those news stories are going across as well. GameStop is $100.90, $100.80, down $1.54. SoFi is up 12 cents to 12.01. Rocket Lab $9.75, up 26 cents. Dow's up 60. Matterport 824 down 15. ME is at 484.5, up 9.5. We got Spire down 11 cents. ATIP is down 6. Smart Rent up 15 cents to 809. Sixterra is up 13, 11.57. That's where we are here, guys. AMC down 21. Robinhood down 25. Vanik up $1.86. Home Depot down 227. IBM up 21 cents. Microsoft down 143. Apple up 18. Goldman up a dime now at 367. It's backed off a bit. We're up 9 on Cisco. We're up $8 on Facebook. Make that down $8 on Facebook. $2.29. Amazon up $42. Tesla down $5.40. Google down $52. That's where we're at this morning. And we're just watching this market go through its gyrations to start the week. I don't think the market knows where it's headed, so we're looking at writing call options for premiums and bringing in. Let's bring in the premiums. Yeah, Alexander sees that. We're up over 8 on Smart Rent. I know. We've been up all day. Interesting. It's the best level for Smart Rent in a while. We haven't seen $8 a share, really, since January the 14th or January 12th. This is Feb 7. It's almost a month. We have not seen $8 on Smart Rent. So, yeah, welcome back. Let's go higher, please. Indeed, let's do that. GameStop, $100.97, just around 101, down $1.20. The volume on GameStop so far today is showing 715,000, and we're near the low of the day. So whatever I'm talking about with GameStop is not helping the stock. I don't know if it's my fault. I'm just saying, hey, who knows what could happen? Who knows what and how stuff can happen? I tell you, the financial books of GameStop and Peloton would be rather interesting to read. I'll tell you that a year from now, there could be most interesting patterns there. But I don't know. We're just here watching the markets, and I'm just speculating in plain English what could happen. Just saying. Nothing personal. Just saying. There you go, kids. Thank you all for joining us today. Jen and I do appreciate it. We're going to be on again today, 3 o'clock this afternoon. I'm going to finish this show up in about 7 or 8 minutes. We're going to be on at 3 o'clock this afternoon for the last hour of trading today, and we'll see how everything wants to sort itself out. And I'll be on tonight on Stock Traveling with Bruce as well, my other channel, 7 and 8 o'clock this evening. So if you have a chance, come on by. Thank you, all of you who are checking out the classes on my website, stockmarketswithbruce.ca, learning how to write call options and become self-employed. Welcome to the club. There's opportunities here, and I thank you for popping in and looking into that as well. Well, we'll just take this one day at a time, one trade at a time, see what gives. Thank you all for being subscribers to this channel, members, and followers. Glad to have you here. Yep, the Dow up 56, Rocket Lab up 22, SoFi up 5. They're hanging on to the green, not by much, but they are. GameStop down 173 to $100.61. Matterport off 18. ME up a dime, Spire down a dime, ATIP down 6 cents, Smart right up 13, Cyxtera up 9. Mixed bag. It's a mixed day today with no serious direction, with the NASDAQ only up 7.8 points and S&P up 2, the Dow up 62. We don't have a lot to look at here at this point. I don't know if the market even knows what is in store for it. John Anderson, thanks everybody. Hi, John. Thanks for popping in. So we'll see how this, this market wants to figure out its future. We'll follow it and just see where we're at, and let's go from there. Hopefully, my internet connection this afternoon will be better than it was this morning. Cross our fingers. I'm not seeing a lot of comments coming through, so something's telling me the connection is not doing too well right now. Appreciate that. I'm going to say my goodbyes, shut her down early, and I'll be back at 3 this afternoon to continue forward with our coverage of the markets. Join me then, everybody. You guys take care in the meantime. Make money, and we'll see you a little later today.